Peace, 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 peace. What's good, family? What's good? What's good? Where y'all at, man? Where are y'all at? Everybody straight?
Hey,
What's going
Mel.
on?
Hey, y'all.
What's up? What's up?
Hey everyone, it's Carletta. How you doing?
How y'all doing?
Good afternoon, good people. How are you today? This is Andreas.
Oh, we great. We great, bro. We great. Can't complain. Yes, sir. Yes, sir. All right. All right. So I'm gonna wait for a couple more people to join. For those of y'all who are wondering, this class is recorded, and this is should have been class number 2, but it's actually the last class. We're about to knock out everything tonight and put y'all in position to start taking action, because as you can see, the crypto market is now going crazy and we are right on time, as always. Yes, sir. All right. All right. So that might be everybody that we're gonna have tonight. Cool. 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 All right. Let's go ahead and get into this real quick. Yeah, man. I try. All right. So look. First, I want to ask y'all some questions, right? So, out of everything we went through on Thursday, hopefully you guys were able to start taking action. I've seen some of y'all in the chat saying that you went ahead and purchased your ledgers and you're waiting for those to come in the mail. I've seen some of y'all asking questions about which platforms to use and maybe trying to get, established on crypto.com and looking at Gemini and trying to figure out, which way to go with that. Does anybody have any questions as of right now when it pertains to the platform? I know someone asked about Gemini and they had an issue trying to pay for something. Heaven, you have a question?
Yes. The only question I have about the platforms is it the same like if you did it on a desktop versus the phone? Because like I'm looking, the one that I've been using the most is Coinbase. I was having problems trying to upload money from my credit card on platforms. So I've seen that you basically have to do it from an account because the credit card company's not having it when, as far as loading crypto. They're not playing.
Yeah, no. So that it's very, very difficult for you to utilize credit cards with a lot of these platforms. But the website that I gave you for that will work best. So what you could do is just go ahead and buy it through the platform where you can actually use credit cards, which would be PayBiz. I think Coin Mama as well were the two that I went over. So you can utilize those platforms with a credit card and just buy it. And then you can move it to the platform where you want to trade it. All right. Because these are not exchanges. These are just websites where you can purchase it. So if you purchase it, you have to go ahead and put it on an exchange. So that way you're able to trade it. So if you're one of the individuals who are using the credit card and you want to be able to purchase it, it's best to just go ahead and purchase it with one of the resources that I gave you. So that way you don't have to worry about it. So when you get it, you'll just have to transfer it into the actual exchange where you want to trade it at, and you'll be good to go.
Okay, and then for as far as the app versus the desktop version, are they the same?
So it's okay. So the website and the app will be the same, but as far as the exchange, when it comes to trading, like Coinbase Pro is what I suggest, because first of all, you're going to wipe away some of the fees. There are going to be fees if you're buying and selling on the Coinbase platform, like the regular Coinbase platform. But if you go to Coinbase Pro, you get to eliminate a lot of those fees. But you trade from there. So now you can actually chart. You can do that chart work. You can see, you know, the numbers and the and everything that you need to be seeing. I know a lot of y'all are probably accustomed to TradingView. It's similar to that, but now you can actually use the platform to do it. So, you know, the app is going to do what the app is supposed to do, give you the opportunity to buy and sell. But you know, active traders, high frequency and all that, you want to deal with Coinbase Pro Plus. It actually gives you the ability to eliminate some of those fees as well. Crypto.com, the website, again, it's the same type of situation, but Crypto.com, I don't think they don't have their trading platform set up for the US, if I'm not mistaken. I don't think you can do that with them, but it's the same. You just have an exchange for you there so that you can buy and sell at a good pace. Not like one of the websites where you're buying it with a credit card and all that. These exchanges are made for you to be able to get in and get out quickly. But when you start getting into charting and doing technical analysis, which we're going to go over tonight, you want to go with the pro version, the exchange pro version, or TradingView, or Gemini exchange, or something like that. I'm gonna go through those as well. But yes, to answer your question, the app and the website are the same, but you want to probably take it to the next level and at least see what Coinbase Pro is like. Because it might be more beneficial.
Can you because I got the regular Coinbase, can you transfer the coins to the Pro, or is it gonna upload like as the same?
Yeah, you just move it over. So if it's on your crypto, I'm sorry, if it's on your Coinbase account and you want to use Pro, you just move it over there. So it ain't like you have to move it over there like a traditional situation. You just move it in there. It's all your account. You know, it's all in your account. So it's no extra work that you have to do to get it into Coinbase Pro. It's the same company, same situation.
Okay.
Yeah.
Thanks, now.
So no problem. Somebody asking for the Zoom link. Who is this? Yes. Sorry about that. All right. So does anybody else got any questions before we get started? We're good to go. All right, cool. All right, so let's just get into it then. Okay, so today we're going to talk about how to trade crypto for profit. All right. So I know there's individuals on here who are in the VIPs, individuals who already have taken my courses, but there are individuals who haven't, and there will be individuals who haven't in the future. So a lot of this information, some of y'all are already going to be privy to, but I'm gonna go through it, and I'm gonna go through it, and I'm gonna run through the basis of it. Okay. If you want to get a deeper understanding of all of these things, I would highly suggest for you to go and get my options trading course or the swing trading course. They will go into more detail about technical analysis and the indicators and all the stuff that we're using. For now, I'm going to go through a brief description of each one that we're using for this specific strategy. Okay. There's thousands of indicators that you can use. For those of y'all who don't understand what an indicator is something that you're going to use on your with technical analysis that's going to help you analyze the market when what you see. What you're looking at right now is tradingview.com. Go into your resources PDF and you'll see TradingView here on the PDF. You open it up. I highly suggest that you get an account with it. You can use the free version. But once you start getting into this game and start seeing some profit, I would tell you to reinvest your profits and get an upgraded version so that you can access all of the capabilities for this particular platform. This right here is just a website, but they have an app too. So you can put the app on your phone and you can use the same, and this, it'll be all be connected, everything will be updated, and you can get everything you need to get out of this particular platform. Now, for those of y'all who like the other platforms that I suggested as far as the exchanges, you can use those as well. So I'm using TradingView for this example, but you don't have to use TradingView. Say, for instance, you want to use Gemini, and we'll talk about that in a second. But let's just say, for instance, you want to use Gemini, and you want to use the Gemini, trading platform. I'm gonna pull that up right now. Give me a second. I gotta sign in, two-factor verification and all that. Okay, 1 second. So if you want to use the platform like Coinbase Pro or the Gemini trading platform, and we're gonna go over another platform in a second, that's perfectly fine. Just make sure that you are able to access all of the indicators that we're talking about right now. Most of the platforms will give you those. They'll give you the ability to use those indicators. All right, so, but I'm using TradingView because that's what I like, that's what I love, that's what I've had my experience with, and I suggest you do the same. You'll find that it's probably a lot easier for you to maneuver on. All right, so this right here is TradingView, just so you know. All right, so indicators. What indicators are? I gave you an indicator list. The indicator list is available in your resources PDF as well. Once we go through this class, you'll be able to open up the indicators list. You should probably do it now so that you can follow along and see which one I'm talking about and really use it as a check mark. You want to have all of those indicators on your chart if you can, because we're going to use pretty much all of them. And if they work in conjunction with each other, it'll be a better experience for you, but you don't necessarily have to use all of them at the same time. For a lot of y'all, what you're gonna find is I may introduce you to some stuff, but that doesn't necessarily mean that that's gonna be 100% great for you specifically. You might find 1 or 2 things out of the 20 that I introduce you to and use that on your journey and kill it with that. If that's the case for you, then so be it, all right? Also, because I'm introducing you to some new stuff, you might take it upon yourself to go try out some other things. All right. For those of y'all who are in my VIP class, we have a class tomorrow night. Tomorrow night, we're going to go over a new indicator tomorrow night. So I'm going to keep introducing stuff to you if you stick around. But if not, hopefully you take it upon yourself to get some time and look at some other indicators and try them out. Now, for the ones that we're using, don't just take my word for it. I want you to get to the point where you back test this stuff. Back testing means you are using the chart that we're looking at right now, and you're going back into the history, and you're looking at the history of that particular security, whether you're dealing with stocks. Right now, we're talking about crypto. So you want to go back into the history and see how that particular indicator has used or has worked in the past. All right. So when you see that it's consistently working the way that you want it to work in the past, then that's going to give you a better win percentage in the future. And for those of y'all who understand trading stocks and what we've been doing for the past few months, you'll see that jumping from stock to stock, company to company, can have a negative effect on you because you have to get used to a new company and a way that it moves on the chart. Shopify don't move like UPS. You know what I'm saying? Ethereum don't really move like Bitcoin all the time. Cardano don't move like Dogecoin. So you have to spend time with each individual coin so that way you can see how it maneuvers on the chart, especially when it's pertaining to the indicators that we're talking about, right? So, the strategy that I'm gonna introduce to you might not work as well with one coin that it does with the other coin. That's why you have to back test all the time. That's why you have to go through the previous price movement so you can see how things are going to move in the future potentially. All right, so that's that. What else did I want to get across real quick? All right, so just know that we're going to be introducing a lot of information. So yes, this is recorded, but still take notes, screenshots, do whatever you got to do. Open up your resources PDF and follow along with the information that I put in the PDF. So at least if something's not going right, I know last time we said one of the links wasn't working. let me know so I can give you the update so that way you can see what I'm talking about. Don't just watch my screen, but pull it up on your screen too if you can. All right. Okay, so first thing we want to go over right now is we want to talk about crypto market cap. All right. This is you should go here every day in the morning or whenever you decide to start trading your crypto. All right. Just go here first. Okay. So you go here first, and what coin market cap is going to do is it's going to, first of all, it's going to tell you what the market cap is for each particular coin. For those of y'all who don't understand what market cap is, that's letting you know how much money is in the actual coin, right? So how much money is going into Bitcoin right now? All right, you see the number, okay? How much money is going to Ethereum? You see the number. So now you can rank these from top to bottom. You see Bitcoin is usually always at the top. Ethereum is right under it. Right under that, you got Tether, Binance, Cardano, XRP. So now you see which one's got the most money in it. All right. Somebody is having issues getting into the Zoom link. Hold on one second. I want to make sure everybody gets in. Just give me a second. All right, they didn't file directions. All right. Let me make sure they get in. And just bear with me for a second. I want to make sure they get in. Hold on. 1 second. Okay. All right. Well, I'm sorry. I can't do nothing for them. They waited till the last minute. That's what happens. All right. So check this out. All right. So now crypto market cap. It's a range from market cap going from top to bottom. All right. For those of y'all who had a question about where do I buy this one? Where do I buy that one? For somebody said, oh, my Uber driver gave me a suggestion on this, whatever. How do I buy it? Go to this website, and what it's going to do is it's going to give you the options for which platform is the best for that particular crypto. Everybody has different quotes. Everybody has different fees. Everybody got different processes of signing up and all that other stuff. So you can source out the best for whatever it is you're looking for by using crypto market cap. So let's say, for instance, we want to figure out what are we looking for? Let's say who had a question the other day? I don't know if they're on this call or not. What coin was they talking about last time in the chat? A day or two ago. Somebody asked that. I believe it was
Theta.
What was it?
I did. Heather.
Tether. All right. Okay. What?
Or no, it wasn't. It was Theta. Theta's the one I'm looking for.
All right,
Yeah.
so check this out. So you type in Theta, right? And you click on it, and then you can see all the information for that particular one. So now, like I said, don't just take somebody's word for it. Do the research and see what it is that I'm looking at. So check this out, right? So you can look at the price of Texas and all that, and then you can see the information as far as the estimates and whatnot. But now you got Theta Markets, okay? So check this out. Now you can see which platforms have it at what price, all right? And then what the volume is, okay? And then what the liquidity is. Liquidity is important because obviously you want to make sure you can get in and get out. And the most liquidity you have, the better opportunities you have to buy and sell at a fast pace, all right? Volume as well. So as you can see, somebody need to get muted. All right, so as you can see, Binance is the top for Theta versus UST, right? UST might not be what you want to rock with. Maybe you want to just go with USD. If it ain't on here, then you have to go with whatever's there. All right. So I like going versus USD, but UST works as well. So let's just say, for instance, we see Binance on the top of the list, but we don't have a Binance account. Sign up for Binance. If you really want to get this coin and you want to invest or trade in this coin, then you need to sign up for the platform that gives you the best option. All right. So Binance is the best option for that particular coin. And then you go forward and start moving in that direction. Now, Binance also hold on a second. Binance is also one of the I don't know if I put that into the resources or not. I'm gonna add that. All right, so I'm gonna add that to the resources. All right, so you guys can sign up for Binance as well. Binance is going to be one of the most reputable platforms for anybody to do anything on. All right. As you can see, just the volume on here. It's a lot of people trading on Binance, and you see what the top currency is as far as volume is concerned as of right now. So if you pull up the chart, you can see Ethereum. That's what I started out with. It's going crazy today. It's moving a little bit faster than Bitcoin is, for obvious reasons. It's cheaper, so more people put their money in there because they're like, I can get one coin of that and hold that. You know what I mean? A lot of people got that same type of insight and mindset on Ethereum. Plus, everything that Ethereum is doing right now is kind of exciting. It's better for the actual coin. And then if you start doing a little bit more research into Ethereum in itself, you'll see that it's actually, it has more capabilities than Bitcoin does. So a lot of people are going to be investing in Ethereum. And as you can see on Binance specifically, Ethereum is the top for today as far as the liquidity and the volume for today. All right. So anyway, Coin Market Cap is where you want to be. Also, they have news, so you can see, you know, what the news is for each coin and what's going on in the market. All right. They also have, you know, calendars, stuff that's coming up. All right. They have pretty much everything you need as far as a home base for you. All right. Now, I would shout out my own website, but my website is a blog website, and it's going to take news source. It's going to take news from certain sources and put them on the website so you can kind of get a little bit of everything. But this right here is the home base. This is where you want to be, you know, every day as far as dealing with crypto. Also, you see it's NFT on here, DeFi, different categories and stuff like that on here. All right. So that's where you want to start. Okay. Now that we understand that, this right here will give you a little bit more direction pertaining to which individual cryptos you want to jump into. Maybe you already got Bitcoin, you already got Ethereum. You're trying to figure out a sleeper. You want to find out which one is the next thing. Like what, I want to jump on something when it's just starting out. That way, when it goes crazy, I can be the one that's getting rich. You feel me? This is where you want to find that out. So you can come here and look and see like who got the lowest volume, and then you can do your research and find out why. Is it low volume for a reason, or is it low volume because everybody ain't on it yet? Does it look like it has potential? Who's backing it? Is it decentralized? Is it not? You know what I'm saying? Is there a CEO, or is it ran by the people? What type of platform? Do they have a trading platform? Do they have their own exchange? Do they have their own, you know, like you have to ask yourself all these questions and see if this particular coin compares to the ones that are on the top of the list. And if so, it might be something that might take off soon. All right. Then you can see what the daily volume is to see from the day to day how many people are actually in it. And then look at the news that's surrounding it to see if it has something that might pop up as a catalyst that could make it move. All right. So this is where you want to do a lot of your studying as far as which coins you want to jump into and which exchanges are best for each individual coin. And you can also put, you know, your portfolio and your watch list on here and see, you know, how that stuff connects and what you can get from that. All right. Now, all right. So that's that. All right. So as far as trading is concerned, I'm gonna get into these. First, does anybody have any questions about that? Does anybody have any questions about this specifically? Anybody?
No, but thank you very much.
Right, no problem. Everybody good? Okay, cool. All right, so what I'm gonna do is I'm gonna show you a few things now. All right, so now we're getting into, let me take this off. All right, this bear with me on this. All right. You guys are gonna learn a lot of stuff right now, and I want you guys to have a clear understanding of what I'm talking about. So I'm gonna go a little slower. If you have any questions, raise your hand and we're gonna go through it. I'm gonna go through this one thing at a time. What I'm doing right now is I'm giving you a formula. All right. The reason why it's a formula is because it can be replicated on any market. Okay. It can be replicated on the stock market. It can be replicated in the futures market. It can be replicated in the Forex market. It can be replicated in the crypto market. As long as the asset is tradable and chartable, you can use a form of this or a piece of this or the entire formula on that particular scenario, okay? My whole goal with this crypto class is to introduce you to the crypto market, get you to understanding of what DeFi is, and get you an understanding of what of how to manage a situation as far as owning your coin and what to do with it and how to control it, and then how to make money off of it. So now we're into the making money portion. In order for you to get to the point where you consistently make money off of crypto, you have to learn technical analysis. There's no way around it. If you don't learn technical analysis, then you're guessing all the time. You don't want to get to the point where you're guessing anything, especially when it pertains to making money and using your hard-earned money to make money. You want to know as much as possible. You don't want to be guessing nothing, all right? So the information that we use with technical analysis is historic information. Yes, there is news out there that we can use to our benefit, and catalyst is what we look for in the news. The catalyst, for those of y'all who don't understand what that means, basically is something that is in the news that people see, read, or hear about that could potentially make some type of interest go into that particular topic of whatever. Right now we're talking about crypto. So whatever that coin is, whatever that article is, whatever that interview or speech or whatever it is, the information that was contained in that could possibly bring volume to the particular coin, which would either make it move down or make it move up, right? In any normal circumstance where there's no catalyst, it's going to move on its own anyway, okay? But if, for instance, if Elon Musk comes out of nowhere and tweets, "I'm the Doge father," that right there is a catalyst. That catalyst for people who are Elon Musk fans would then take their money and put it into Dogecoin because they see that their guy is invested in that, so they should be invested in it. That volume will force the prices to go up because you have a lot of buyers moving in. And then when the buyers come in, they move the price up, and now you have an opportunity for you to make money, all right? That is a catalyst. When somebody of high interest or somebody has a huge following says something positive about the specific crypto, or someone that is in the management or somebody that's in the controlling interest of that particular coin says some good news, or there's some good governmental news, or there's some good blockchain news, or there's some good anything that is positive for the particular coin can be used as a, or could be considered a catalyst and used for it to push the price up, gain the interest, increase the volume, all of that. All right. So that's what we look for with the fundamentals, and crypto market cap can help you with that as well. And then the other resources that I gave you as well. But without that, you want to be able to see if you can measure the movements without the catalyst. Okay. So what you're looking at right now is Ethereum. All right. What you see here is the daily chart. We're on the daily chart. The daily chart, basically what that represents is each one of these candles represents one day. All right. This is a candlestick chart. All right. If you're on TradingView, you have the ability to maneuver and make it a line chart if you want. You can do area, where the bottom is shadowed out. Baseline, to let you know whether it's super bullish or super bearish, however you want to do it. Some people like the bars. There's no different. It's all pretty much the same, but we like using candles because candles can give us a better story on the actual day pertaining to this particular chart. If I move to the 1 hour chart, each candle is 1 hour, right? So I'm be able to understand exactly what happened within that particular hour, okay? Now, in your resources, there is a candlestick cheat sheet. This candlestick cheat sheet is actually going to give you not what each candle means, but what candle pattern you can look at on the chart and what it's going to tell you, right? So if you pull up the chart, pull up the cheat sheet, what you'll see is you'll see the candle readings for each particular pattern, right? So one of the patterns on there is a bullish engulfing pattern. right? If you pull it up, you'll see a bullish engulfing pattern. This is a bullish engulfing pattern, all right? So just to give you an example, you see one candle here is a bearish candle, all right? The candles that are going down, they're red, they're bearish. The candles that are going up are bullish, all right? So the green ones on my chart are bullish. The red ones on my chart are bearish. Now you have one bearish candle down here, and then on the next day, you had a huge bullish candle, but this candle's body, right? The body, which is the huge square with this filled in square, and then the wicks on the top. The wick is just like the little line, all right? The little small line on the top and bottom. Those are wicks. The middle part is the body. The body of this candle has engulfed the candle of the previous day, which is basically means it's bigger than the previous day to the point to where it has gone above and beyond where this candle has went, all right? So now when you see this on the chart, that's a clear sign that for the rest of the day and for the rest of the week, possibly you will get a bullish movement, all right? So that's a sign for you to start looking to actually buy, okay? That's a buy opportunity. So if you have this information and you see, oh, you know what? I checked the chart today and I got a bullish engulfing candle at the end of the day. Tomorrow, I'm about to buy some. I'm about to buy Ethereum tomorrow. You buy it the next day, boom, it goes up, all right? But you are able to see that it's going to go up based off of this information right here from these 2 days, all right? So that's just an example of what the candlestick chart cheat sheet will do for you, all right? It's a cheat sheet. It's literally a cheat sheet, all right? Let me see real quick. I'm gonna pull it up so you guys can see exactly what I'm talking about. 1 second. I want to make sure you guys have a full understanding of what I'm going through right now. All right. So the candlestick cheat sheet. Okay. So, all right. So we have some individuals in here who wasn't following along. I just tried to open the candlestick cheat sheet and it doesn't open. So now I got to upload that and make sure that's taken care of. But I want you guys to follow along. So if you have your resources, go to the back end of your the Gumroad account and then open up the PDF and you can see where all the stuff is at. All right, technical analysis section on the PDF, click candlestick cheat sheet and you can open that up. All right, so let me go ahead and get that for you now so you can see what it is. Now, all of y'all, this is my old logo, my old website, so it's all good, but the information is still here. All right, so these are all the candlestick patterns. You have bullish candlestick patterns here. You have bearish candlestick patterns here, all right? I suggest that you go and get the book, Candlestick Trading Bible, all right? The Candlestick Trading Bible will help you study the information, all right? The Candlestick Trading Bible link is in the book recommendation section of the Trading Resources PDF. So get that book and that will break down a lot of the stuff for you. And then this cheat sheet will make it a whole lot easier. So when you can see this stuff on your chart, you kind of know what's about to happen. It's almost like you're able to see the future. And it's a cheat sheet is exactly what it means, all right? As you can see, it's a breakdown right here of what bullish and bearish candlesticks are, all right? The wick, the top wick, the bottom wick, and the body. You see the body in the middle, high, upper shadow, close, open, lower shadow, low. What that means is on a bullish candle, it opens at the bottom of the body, all right? And it closes at the top. Open and closing meaning for that particular time period, if we're on the daily chart for the beginning of the day, right? The beginning of the day, which would be on this particular Ethereum, you have to look and see what the time frame is as far as the hour, right? But whenever that hour started or whenever that day started, you will see that on the actual time mark here. So right here, we're on 24. We got 24 minutes until this candle closes. All right. You see this huge body right here. So look, in the beginning of the day, 23 something hours ago, it opened right here. All right. Throughout the remaining of the day, the entire body of the candle got bigger and bigger, which means the price has gone up, 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 up. Okay. At one point, you see this wick here. The wick gives you a sign of where the price has already been. When you see a wick, that means that the price already went all the way up here, and then the body's down here. So that means the price went up here and then it came back down, right? So depending on where this closes at, will help you decide what it will open at on the next day, okay? So look, we're gonna be on this call while we see the next day open up. So we're gonna keep track of all this stuff while we're talking, all right? So look, the candles are gonna give you a sign or a signal of what might happen on the next candle, depending on what chart you're on. This is the daily chart. So this wick right here gave us a sign of what's gonna happen the next day. Let's look at this particular wick right here. You see this huge wick right here. This wick right here is about as big as the body on this day, all right? So the wick on August 5th was about as big as the body on August 4th. What does that mean? Like I said, when you see a wick, that's telling you where the price was at one point, and then the body will tell you where the price actually closed at, all right? So the wick down here told you that the price actually came all the way down here at one point during the day. It opened right here, but people started selling. They started selling their Ethereum on the 5th. A lot of people were selling their Ethereum. A lot of people cashed out. A lot of people got in right here, made all this money, saw this red candle right here, then got a huge bullish candle today, and was like, okay, I'm good. I got my profit. I know what I needed to get out of the situation. I'm good. I'm out. They started selling their Ethereum. That's what this candle means, but it still closed bullish. It's still green. So what that means is at one point of the day, everybody was selling their Ethereum. But then at another point of the day, people started buying it back up again. So when they started buying it back up again, it actually continued to get the prices higher. And when the prices went higher, the wick was established because the price closed up here, all right? So the price opened up here, dropped all the way down here, went all the way back up to this point, and then closed right here, all right? I'll blow this up a little bit so y'all can see it better. Now we're on today, all right? Ethereum opened up today at $2,892.54. It dropped all the way down to $2,857.25. But then it went all the way back up, all the way up to $3,181.41, 44 cents, and then it came all the way down, and right now it's currently trading at $3,132.24. Within this whole entire day, there's absolutely no excuse for you not to be able to make money. By the end of this class, if you have a day like this, you have to make money on this day. Now, when I trade stocks and Forex and all that other stuff, I normally don't move off of the daily chart because I'm a conservative trader and I use risk management properly, and I do it in a way to where it's low management. So I can get into a trade and I can leave it and walk away, and I can check it and monitor it and then decide from time to time if I want to stay in or if I want to sell a little bit or get out, whatever the case may be. But this will be over the course of a 2, 3, 4, 5 day period. Also, keep in mind this, for those of y'all who are interested in the stock market, there are certain stocks on the stock market that work work side by side with Bitcoin. For instance, Mara, right? MARA. We got into Mara last week. I think I got into Mara on Wednesday, maybe even Tuesday, right? I got into Mara on Tuesday because the price of Bitcoin has been going up, right? So on Tuesday, it didn't move that much, all right? Wednesday, it didn't move that much, but Thursday it moved, Friday it went crazy, right? So I held that particular position for about 3 or 4 days, closed it on Friday, and now I made money. I made a good, over $500 on that play, right? That was over a course of 3 days though. With this particular market, I operate a little bit differently. I can still use the same strategy and hold my position for a few days, which could be very beneficial because when these particular coins start to run, they run for days. Sometimes they run for months. So there's nothing wrong with holding your position for a long time. But if you want to be conservative in a way to where you're playing a low risk game and you use these methods, you could just use them day to day. So one day you might feel good, you got some free time. Let me go ahead and make some money with the crypto market real quick. All right. One day you feel like I don't want to mess with it. I'm gonna just see how it's moving. Or you can do both. You can say, look, I got a long-term outlook on Ethereum and Bitcoin. I think the price is going to go up and it's going to double. Let me go ahead and put some of my money in there, maybe even dollar cost average to the point where I put $100 a day or $100 a week consistently. Don't matter what price it is. I'm just growing my position because I know it's going to go up. I might do that. That's a long-term investment. A lot of people do that. You can have that, and maybe you do that with your crypto.com account, right? But then you go into Gemini, or you go into Binance, or you go into, one of these other platforms, Coinbase, and you trade in there, right? So now you can say, all right, from day to day, if I look at the candlestick cheat sheet and I see a pattern on there and I know what that means, oh, I got a bullish engulfing pattern right here. It went red. And then on the 5th, I got a bullish engulfing. All right, I'm jumping in there tomorrow because it should be a bullish day. I'm just going to wait for an opportunity for me to buy. So when it opened up right here at 2729 and you watched it and it dropped all the way down, you bought right here. And then it went all the way up to 28.48 and you sold it. You out, in and out. Now, for those of y'all who have troubles with other platforms with pattern day trading, if you're in the stock market or your options and all that, you don't have to worry about that with the crypto market. You can get in and out as many times as you want. Nobody's going to restrict you. All right. So you have the ability to get in and out as much as you want, and you have the ability to do it 24 hours a day if you choose. Okay. So that's that. Now you understand candlesticks and you understand candlestick patterns because you have a cheat sheet to kind of let you know what the patterns are. All right. Now let's talk about structure. Very, very important. Market structure is the most important part of all of this. All right. I have a cheat sheet for that too. If that doesn't work, I'm gonna have to update all this stuff anyway, because I don't even want to leave it up to chance. I'm gonna get y'all right. So I got 2 cheat sheets for you pertaining to chart patterns, which are basically helping you with market structure and letting you understand what might happen when you see each particular pattern. This is one of them. All right. Now with these cheat sheets, what you're gonna do is you're gonna use them to help you find trading opportunities. These cheat sheets are going to help you predict what's going to happen in the future. When you see a pattern that looks familiar to one of these that are on the cheat sheet, it's going to let you know what might happen in the future, right? So let's look at current events right now. Here you have a double bottom. Now, this chart pattern cheat sheet is really only significant if you can catch it before the action actually finishes, right? So you see this double bottom right here, right? This double bottom right here is letting you know that 1, 2. So when you see a situation where it looks like a W might be established on the chart, you want to catch it when it's at the second low point before the full W actually creates itself. All right. If you're able to catch it here, then you can get into the particular position and ride it all the way up until the W actually forms itself. All right. So that's what the chart pattern cheat sheet is for. You want to catch it when it breaks out of a pattern, or you want to catch it before the pattern finishes. All right. So in this particular case, you have a couple opportunities to jump into this double bottom, where it's about to be established, or here where it's broken out of this particular pattern. All right. Now let's look at current events. What you see on Ethereum, what do you see? What do you see? What do you see? Type it in the chat. What do you see on Ethereum? What do you see right here? What do you see right there? That's a double bottom. All right. So if you was tapped in and you saw the chart pattern cheat sheet, you would have been able to see. Now, in order for you to measure this, you have to understand market structure, right? So market structure is telling you, now let's backtrack a little bit. All right. Market structure is telling you where support and resistance is. These are 2 very, very important things, support and resistance, right? Support is at the bottom. Resistance is at the top. Support is letting you know where the bottom of the market is at pertaining to this particular sequence of time, or whatever this time frame is, right? So if we're going to go from what is this? Let's go from May 1st. If we go from May 1st all the way up until June 24th, right? If you look at the chart, you're looking for support and you're looking for resistance. Now, at what point does the actual Ethereum stop dropping in price? That's what you're looking for when you're dealing with support. Where is the lowest point on this particular movement? The lowest point is where these huge wicks are. These are extreme movements on the chart. This is an extreme movement. Boom, it jumped up. This is an extreme movement. Boom, it jumped up. Here's another extreme movement. Boom, it jumped. So you're looking for this all over the chart. If you go all the way back to the beginning of time, you have to notate all of this. This is why big time frames on the chart are important. All right, I'm on the daily chart. We can even go back to the weekly chart. If we go to the weekly chart, it might look a little crazy, right? But this is the beauty of learning to trade and learning technical analysis. Now, on the daily chart, we can clearly see support is around this range. All right, so if I use this wick, I can make a little notation by drawing some type of a box or some type of a support line here to let me know that this price range is very critical. All right, I might take it to, from this wick down to this wick, make sure this wick is covered, make sure. So this right here, what this is telling me is if the price comes back down to this area more than once, more than twice, if I catch it at the third time, I know what's going to happen. It's going to go up because it does not want to drop below this price. What it's telling me is every time Ethereum jumps all the way down to 1700 range, people are buying. They're buying Ethereum to the point to where they are not letting it drop below this price level, right? That's the information that we gather from finding support in this time sequence. Now, where's the resistance at? You have to go and find where the highest points are or where the extreme points are on the particular chart. Now, there's a few different ways to find resistance, all right? You can look at it like finding extreme points. You got extreme here, you got extreme here, extreme here, all right? You got a few extremes here, few extremes here. So there's multiple levels. There's not one specific level where we can just draw a straight line out like we did with support. So we have to be creative with that and look for support in a way to where it might not be flat, but maybe it's diagonal, right? So if we look at the price movement, we can see, okay, I got an extreme point here, and that's very significant. I might notate that. I might make a notation here because you see that the price is going crazy right now, and it will get to that point eventually, right? So I can use that information and say, all right, you know what? Since Ethereum is finally going up, I'm just going to look for opportunities to buy Ethereum as it gets all the way up to this $4,200 price range. That's where it's headed. It's heading right back to where it was before. Price has memory, and the memory on the chart will let you know where the price is going to go in the future. So you have to use the previous price movements to predict the future action. All right. So as you see, Ethereum is on its way up back to the 4,000 level. That's why I'm not pressed about teaching you this in a hurry, but teaching it to you now is beneficial because you see where it's going. It's going up there. It's going to go up there, and it's probably going to go past that. Now you have the opportunity to get in when it go. Now, just know that it's probably more than likely not going to go straight up. At some point, it might drop a little bit, and then go up. Maybe it'll drop all the way back down here and then go up. Maybe it'll just move sideways and then go up. Maybe it will jump straight up and then stop and come back down. We don't know exactly how it's going to get there, but we know it's going there. All right. So we just have to figure out our game plan to let us know when it's the right time for us to get in and get out, long term and short term. Now, that's the biggest resistance level right here. Okay. Another way that you can find a resistance level, right? Now, if we cut this off, we can see what it used to be before it broke out, right? So how would I use this information to find a resistance level, and how would I chart this in a way to where I can give myself an entry, right? You pull up the cheat sheet. So check this out. The cheat sheet, I'm sorry, this is the chart pattern cheat sheet. Let's look at let's look at this one. All right, so check this out. You have, no, you know what? I want to find, let me look at the other one. I gave you two. Let's look at this one. All right, let's look at this one. Now we have a bullish outlook on the particular stock. So we're trying to find bullish patterns to see if we can find something that makes sense, right? So we're looking for the triangle. We got symmetrical triangle here on this one. We have a symmetrical triangle going in the opposite way, broadening triangle going the opposite way. We have a pennant, which is basically a triangle type flags situation going up, ascending triangle going up, but it came from the down. All right, descending triangle come from up, going down. So these are telling you what might happen pertaining to bullish going bearish or bearish going bullish. We want to find where we're at, right? So in my estimation, and I'm having this conversation as if I don't know what's about to happen, or I don't know what's going to happen, or what's happening already, right? I'm going off of this with a blind eye, right? So I'm looking at this like, all right, I'm trying to find a pattern. Now, maybe I might not find nothing that's on the cheat sheet, but I could see how the patterns look. All right, so if you look at the pattern cheat sheet, you see how they look, right? The candles are inside of a pattern. They're inside of a triangle, right? So can I see a triangle on the chart? Can I find a triangle on the chart? Well, when it comes to drawing trend lines, you can see if you use the extreme points on the chart, I can connect this extreme point to this extreme point and see a triangle right there, right? So if I have a bullish outlook on Ethereum, basically all I have to do is wait until the price exits outside of this triangle, because the chart patterns are telling me what happens when it gets close to the end of the triangle, it breaks out. When it gets close to the end of the triangle, it breaks out. When it gets close to the end, it breaks. When it goes close to the end, break. So you might not be able to find this particular pattern on the chart sheet, on the cheat sheet, but it's the same concept where, okay, if I find a triangle type situation, I know that, or a pennant type situation, the price came from the bottom, it stopped at support, it stopped at support, it stopped at support. If it stops at support and goes up and it exits outside of this, I'm going in. I'm buying it because I see what's going to happen, right? So that's what the chart pattern cheat sheet is going to do for you. And this is what charting can do for you. Now, obviously, we're going to have the Discord chat open for a few more days. So if you need some extra help when it pertains to this charting technique, just let me know and I can give you some demonstration videos and whatnot. But this is what you're doing. You're using the trend lines. All right. If you want to tap in and find the trend lines on TradingView, you go to the side. This toolbar right here has everything you need. All right. You can open up the top. You see trend lines. That's exactly what I just used. You click on trend line and you can take the line and you can drag it wherever you need to drag it. All right. Make it make sense. All right. The box down here that I used, you see it right here. You click, boom, rectangle. All right. You click the rectangle, you click it, drag it out, do whatever you got to do. You can change the colors. If you want it to be pink, purple, you want to type text in it, you can type text in it. If you want to, whatever you want to do to personalize it and make it easy for you to read and easy for you to understand, do what you got to do. You know what I'm saying? If you want to, you know, make it pink, whatever you got to do. That's why I love TradingView. There's no other platform that's going to give you these type of capabilities and make it this easy for you. Okay. I see y'all talking about what's happening right now, and we're going to get into all that. A lot of people not going to understand what y'all talking about, but y'all vets. So y'all know what to look at. All right. So boom, that's where we at. So now look, now when it pertains to the pattern, boom. So look, on TradingView, you drew the trend line, right? You can right click and add an alert on the trend line. And if it was in real time, you'd have an alert set. So when the price crossed this trend line, you get an alert on your phone, you get an alert on your computer, you get an alert on your app, wherever your TradingView is logged on to, you get an alert, and then you know it's time for you to act. Okay. So that's one way you can do it. Trend lines, chart pattern breakouts, chart candlestick readings, candlestick patterns. Those are 2, 3, 4 different ways that you can measure the market and see when it's time for you to jump in. All right. So now look, Now, now that we're talking about current events, all right. So now we just saw the W pattern. That was one way. All right. We saw the chart pattern with the triangle. That was another way. All right. The third way is with moving averages. Okay. So moving averages are these lines that you see. All right. You see these two lines on here. Let me see if I can. All right. So look now. Again, you pull up the indicator list that I have in your PDF, and you'll see all this stuff. All right, so the moving averages that we're going to use is I'm gonna take these off. So we're going to use the 200 moving, the 20 moving average, the 50 moving average, the 200 moving average. All right, moving averages, what they are its previous price movement with a mathematical equation in each day is combined into a formula of the previous day, and whatever moving average number you're working with, that's the amount of days of data you're using for each moving average, and each movement on the moving average is new information that was established from old price movement. All right, so let's start with the 200-day moving average. All right, the 200-day moving average, which is in red, what that means is 200 days of previous price movement combined into an equation to give you a new point on the chart for this particular moving average. This is a lagging indicator. It's lagging, which means it moves behind the price, okay? Keep that in mind. It's very important that you understand that this is a lagging indicator. A lot of people make the mistake of trying to use the moving averages as a tool that's going to give them a sign of when they should make a move or not. We're going to use this as a sign to help us make a move, but more importantly, we're going to use it to help us see what kind of market it is. All right. So the 200-day moving average is 200 days of previous price movement. When you look at it on the chart, you can see that it's moving up. So even though Ethereum had a huge point in time where it just dropped in price, the moving averages was still moving up. So what that's telling you is, because of all of this previous price movement back here, it was so many buyers and so much action for 200 days that it wasn't enough for the actual moving average to start going down. It's just going to continue to go up, because in the previous 200 days, it's been a huge amount of people going into the Ethereum, and each new day is not giving me enough to actually push this down. Okay. So even through this huge sellout, the moving average continued to still go up. Even when the price came down below the moving average, it still wasn't enough for the moving average to start dropping. It still continued to go up. All right. Now, the 50-day moving average. All right. And before I go any further, if you want to know how to put these on the chart on TradingView, you go to the top, it says indicators. You click on indicators, you type in moving average. All right. Moving average pops up. You just click it. That's all you do. Just click it. When you click it, it'll go to the side, right? All right. We'll go to the side and you click on the down arrow and you'll see it in here somewhere. All right. Now, when you first put on a chart, it's probably going to show up as a 9. So you want to open it up. You hit the gear symbol. All right. And then you go into inputs and then you type in the length. So you got to have 1 for 200 days. So you go into the indicators, you click it, you find moving average, you click it one time, go in here, type in 200. All right. Don't change nothing else except the color. Keep everything else the same. All right. Then you're going to go in here again, click it another time, open up the gear symbol, type in 50. All right. Change the color, do what you got to do. Don't touch nothing else. Then you want to go in here again, type in moving averages, click it a third time, open up the gear symbol, go into inputs, type in 20. Change it to 20, change the color, don't change nothing else, keep it, and that's it. All right. That's it. Now, you got the 50-day and the 200-day. When you're looking at both of these moving averages, this is how we use them. When the 50-day moving average is above the 200-day moving average, that means that the market is bullish. When the 50 moving average is below the 200 moving average, that means that the market is bearish, bullish and bearish. When it's a bearish market, that means the prices are dropping or moving sideways. When it's a bullish market, the prices are going up, okay? So in order for you to make sure that you're on the right side of the market, use the 50 and the 200 day to let you know where you're at, all right? This is the daily chart, 50, 200 day moving average scenario. Right now, as you can see, the 50 moving average dropped a little bit below the 200, but it's obviously going back above it again. So as we know, we're back into a bullish market and the price has already gone up. Like I said, it's a lagging indicator. So you got 18 to 3. So you got double the price already, and the moving average are just now moving above it. So again, it's a lagging indicator, all right? We're just using it to let us know what side of the market we're on, but I'm gonna show you a strategy to let you know how to use it as a trigger, okay? So check this out. Now you got the 20-day moving average, 20 days of previous price movement, same situation. The only thing with the 20 moving average is we're going to use this as one of the triggers to help us get into the market, which is giving us an opportunity to buy, right? Now, what we've been experiencing in the stock market lately is the 20-day moving average hasn't given us enough to let us know when it's time for us to buy it, because a lot of times what you see, even in this example right here, if you say, yo, when the price crosses the 20-day moving average, I'm buying it. If you would have did that in this scenario, you would have lost money because you seen it went up a little bit, got to the 50-day, and then it came back down, right? So you use it as an opportunity for you to potentially get in early, but don't use it as your only trigger, and don't go only solely go off of the 20-day, all right? That's just something that's there for you. We can take that off for now, all right? But we're using the 50-day. The 50-day gives us that signal. Now, when the 50-day is above the 200 and the price goes above the 50, that's our signal to buy. So now I just gave you, 3 or 4 different opportunities to buy. The first one was double bottom using the chart pattern cheat sheet, all right? The second one was bullish engulfing pattern using the candlestick cheat sheet. The third one was chart pattern breakout using the chart pattern cheat sheet. All right, boom. So now you had 3 opportunities to buy Ethereum, 3 different triggers for you to get into this trade, 3 different ways for you to make money. Absolutely no excuse for you not to be able to get into this particular stock or into this particular crypto coin at the right time. Now we just have to figure out, when do we get out? All right. So now, getting out of the trade, which is the hardest part for most people. I just showed you, super easy to get in, but getting out of the trade is the hard part, right? How do I get out? How do I figure out when it's the right time for me to even start thinking about getting out of the trade? There's more indicators on the list. All right, so check this out. Now, the first indicator we're going to talk about is the pivot points. All right, so check this out. Go into your indicators, type in pivot points standard. All right, pivot point standard. Click it 1 time, click it 2 times, click it 3 times, how many times you want to click it. But click it to make sure that it's on here. And we're going to use 2 different ways of looking at this. The first way we're going to look at it, because we're on the daily chart, we're going to look at the monthly. I have Woody and I have pivots time frame set as monthly. All right. And I'm taking off the historical pivots, but if you want to back test and go back and look and see how these things work according to the particular crypto, you can do that. I suggest you do that. But for me, I'm taking the historicals off, and I'm going for the one that's current. All right. So now the pivot points. What the pivot points are is institutional traders, the guys who the market movers, the market makers, the guys who are on Wall Street, the guys who are doing this as a job, who manage money, who manage funds, portfolio management, all that stuff. This is information that they use. It would be beneficial for you to use the information that they use because they're professional And a lot of people who are not professional don't even know about this, understand this. They just never even heard of it. It's something that's totally new. They don't know what the hell they're looking at, right? Let me take this stuff off so it's a little bit more visible. All right, I'm gonna just go ahead and take these moving averages off for now too. All right, so check this out, right? So what we're looking at is the pivot points. Now, this green line right here is the pivot. Every single time period that you're looking at, we're looking at the monthly pivots, right? So if you look at the time on this, it goes from August 1st all the way to September 1st. So this is 1 month, right? This pivot, a new pivot is established every single month. The pivot is here, okay? What that means is that's like a median range of where the price is at, all right? Median range, all right? Well, what we use it as a potential time for us to start looking at buying in, all right? So if the coin ever gets close to this particular point, we can kind of make a decision on what we want to do with buying or selling, okay? So simple breakdown. If there's a new month that is established and the coin opens up above, like, let's go into the new month, all right? The new month, the pivot's down here, but the price is up here. It's already above the pivot. You have to have an immediate bullish outlook on the actual crypto and assume that it's going to continue to go up because it's already opened up above the pivot. All right. You should 70, 80% chance of it continuing to go up if it opens up above the pivot. What if it opens up below the pivot? If it opens up below the pivot, I would give it probably a 70, 80% chance of it dropping in price. All right. Where is it going to go up to? You have resistance level 1. Let me show you the labels. All right. So you see R1, R2, S1, S2. What did I say? Support and resistance, right? With these pivots, they're going to give you the support and resistance for this particular time frame on the pivot. For the month, as far as the pivots is concerned, the resistance level 1 is here at $2,953.24. The support level, the first support level for this particular indicator is at $2,114.67. All right. So what I would tell you is, if I'm bullish on Ethereum, I'm gonna go ahead and assume that at minimum it's gonna go all the way up to $2,953.24. If the institutions and the people who have huge amounts of money are looking at this, then what that means is they're going to start looking for an opportunity to potentially sell when it gets to that particular point. If there's more buyers than sellers, then it will break through this and go to the next resistance level, which is $3,172.35. All right. If more people end up selling Ethereum than the people that are buying Ethereum, then it will drop in price. And if it drops, it will drop here first. It could potentially drop here and then go up, or it could break this level and then go down to the support level. If it breaks the support level, then it could go down to support level 2. So that's how you utilize the pivot points. All right, now I'm on the daily chart. This is the monthly pivot. So you're using the monthly pivot if you have a outlook on this on a monthly time frame. So if you want to buy Ethereum, you're looking to hold it for potentially a month. So within this month, I think that Ethereum at some point is going to get to 2,953. Now, I don't know when it's going to get there. All right. I'm not a fortune teller like that, but I can assume that it's going to get there because this is what my indicator is telling me. This is what a resistance level 1 is at. And this is what the institutions and the big money managers are using. This is the information that they use to help them in their journey. Okay. So how long you want to hold the Ethereum? Well, that will determine on which chart you're using and which indicators you're using. In this particular scenario, I would say that I'm going to hold it for a month. And out of this month, I'm going to predict that it gets there. Now, if there's a huge amount of volume and there's a huge amount of people going in and there's a big catalyst, which it is right now, you could assume that it might get to $2,953 in a few days. It might not take 30 days. But if it gets there that fast, then you can kind of assume that it's probably going to get to the resistance level 2. And with crypto, a lot of times it goes above and beyond resistance level 2, 3, 4, 5, 6, and just skyrockets to the point to where there's no equation that you can put to help you gauge how high it's going to go. It's just going. That can happen too, especially with crypto. All right. So, but this is what we're using to help us get in. All right. So that's the monthly. That's the monthly. Now let's go down to a lower time frame. Let's go to the hour time frame, right? So now we go to the hour time frame and you can see what's happening. Okay. You can see what's happening on the hour time frame. A new candle just started over about 15 minutes ago. All right. New candle. All right. With the information that we just learned, what do you see? The candle opened up right here. It's dropped all the way down here, and now it's up here. Okay. Now, what do you think is going to go? Do you think it's going to continue to go up? Now, we just saw on the daily chart that a new candle's open. This is a 24-hour. It's 24 hours on each candle. A new candle has opened. It opened up high. All right. And it came down a little bit, and now it's stuck in this range. Where do you think it's going to go? Not to mention the fact that we just saw the monthly pivot. It already passed resistance level 1. Now it's at resistance level 2. If I expand this and go and put resistance level 3 and 4 on here, you can see that you got some more levels. So if it goes beyond 2, it might go to 3. If it goes beyond 3, it might go to 4. Where do you think it's going to go? Where do you think it's going to go? How confident are you in Ethereum right now? And how high do you think it's going to go? How much volume is in here? How much people are talking about it? What's going on? What's the catalyst? All these questions will determine where you think it's going to go. Let's just say, for instance, you think it's going up today. How do you get in when you see that it's already past resistance level 1? It's dangerous to get in right now because it's already at a resistance level. Resistance, support. With support, it didn't want to go below a certain level. With resistance, it doesn't want to go above a certain level. So the same way that you've seen price bounce off of support, it can do that with resistance. If you pull up the chart pattern cheat sheet, we saw a double bottom, but there's double tops as well. So the same action that you saw on the double bottom can happen on the top side. So we want to protect ourselves to make sure that we don't get caught in that by getting in at the right time and getting out at the right time. If I'm a conservative trader, I might look at selling my Ethereum right now. This is the reason why you see people selling. That's why the price dropped a little bit. Some people sold right here because they're looking at the same thing we're looking at. Resistance level here is heavy. I'm getting out. Now, as people are selling, a lot of people are buying. There's an equal amount of buyers and sellers at this particular point. That's the reason why it's not exploding and going crazy. It's just stopping and going up and down within this range because there's a lot of people buying, there's a lot of people selling, and we're trying to figure out which one outweighs the other. All right. Now, once there's more buyers than sellers, the price will go up. Once there's more sellers than buyers, the price will go down. Right now, we don't know how it's pretty equal right now. All right. So let's go down to a lower time frame and see. Let's just say, for instance, I seen some news. I seen the catalyst. The market's going crazy. I don't want to miss the opportunity. Yes, I see it's at a resistance level, but I think it's going to go all the way up to $4,000. And right now it's only at 3. So I'm looking for a buy opportunity. I don't want to waste a day, right? If it's a bullish day, it's a bullish day. Let's just say it's bullish. Yes, now you see it going red, but let's just say it's bullish, right? We go down to a 1 hour time frame and we're just going to trade it for the day. We're just trying to make some money today, right? Now, we're on the hour time frame. Each candle represents 1 hour, right? Each candle represents 1 hour, okay? Now, on the daily time frame, you have the same situation. You got the pivots, right? But this time, because we're on the daily time frame, we want to move the pivot time frame down to something that makes sense. All right. Now, each day on the market with stocks is 8 hours in a day. All right. With crypto, it's probably the same. 1, 2, 3, 4, 5, 6, 7. So you got 7 within this one day. All right. So the first candle opened up at 12 o'clock. All right. Which is 12 a.m., which is the beginning of the day. And then the last one closed at 6 o'clock. All right. So from 12 to 6 is when is when this time sequence is here. So you got this amount of hours. So you got to think about which pivot time frame you want to work with. I would suggest you use the daily, right? So the daily pivots are going to tell you the same information. It opened up above the pivot. So I can only assume that it might go all the way up to resistance 1, 70 to 80. I didn't say 100%, 70 to 80%, right? So it's a 70 to 80% chance that this goes all the way up. Yes, you see some red here, but you also saw red here. You also saw red here. You also saw right here. It didn't stop the price from going up, right? So don't be discouraged because you see red. We're having a daily outlook on this. I'm sorry, you're having a daily outlook on this, and you understanding that in each sequence, you got 6 hours in each sequence. Now 6 here, 6 here, 6 here, 6 here. It equals out to 24 hours. So within a 24-hour day period, you believe that Ethereum is going to get all the way up to $3,316.29. That's the first resistance level. All right. The first support level is $3,012.25. So if it drops, it might drop to here and stop and go up. It might drop to here and stop and go up, or it might just drop off of the face of the earth. We don't know. But these are to make our chances bigger of us being right. We're using these indicators to help us. Now, let's just say, for instance, you decide to buy it, right? Based off of just this information, you decide to buy it. What are you trying to gain in this scenario, right? Every single time you jump into a trade, you have to know how much you're willing to risk and how much you're willing to gain, okay? How much money do you want to lose? I know people hate hearing that question and they hate asking themselves that question because they're like, I don't want to lose no money. I don't want to lose no money. But that's not logical. That's not a logical way of thinking when it pertains to investments in anything in life. There's an opportunity for you to make money, but there's also an opportunity for you to lose money. All right. We're trying to lower, you're trying to make your odds in your favor by using technical analysis, but you can still lose money. So you have to ask yourself, how much are you willing to lose? That will pertain to what your position size is and how much money you put into this particular scenario. All right. So let's just say, for instance, you come into this market with $500, right? You buy $500 of Ethereum. How much of that $500 are you willing to lose? Are you willing to lose the whole $500? Or are you only willing to lose a percentage of that $500? So that way, if you're wrong, you can still have money left over to try again and hopefully make back what you lost, right? So this is how you measure your risk and reward using support and resistance on the pivot points for the day, okay? Let's just say, for instance, you're looking at the pivot points and you say, okay, I got a support level here. And really this is support level 2 because the price is above it. And then you got a resistance level here. I think that the price is going to go to 3,316.29. So that's my first target. All right. That's where I want to go. Okay. If the price goes down, it could probably go down to 3,095, but it might even drop all the way down to 3,010, right? If it goes down to 3,010, how much money will I lose? This is the beauty of TradingView. TradingView will give you the ability to measure your risk and reward using several different tools. The first tools I used, I went to the side and I saw the ruler here. You click on the ruler and it's going to measure the distance and give you a percentage of where you want to go. All right. So the first support level is down here. That's a 2.16% drop in price on the first support level. All right. Support level 1 after the pivot, that's a 4.75% drop in price. So basically what it's telling you is if you buy Ethereum right now and you're wrong about the direction, and you decide to wait until it drops all the way down to the support level 1 on the pivot, on the daily pivot, you might potentially lose 4.75% of your $500, right? So let's do some math real quick. $500 times 4.75%. 4.75%. That's $23.75. I can live with that. I can live with that because essentially what you're doing is giving yourself the opportunity to lose, you know, multiple times, maybe 4 times before you blow all your money, right? So this is the basis of risk management, understanding your risk and reward and knowing that every single time you jump into a trade, you want to put yourself in position to gain more than you lose. Now, if I lose 4.75% max. Anything below that, I have to sell. No, when you go into your platform, you will have stop limits and stop losses. Okay. If anybody needs help with that, let me know and we can go through it. But stop limits and stop losses will be available on every platform you trade. If you trade on TradingView and connect your Gemini account to TradingView, I'll show you how to do that. But if you're using the regular way of doing it, you can set alerts and you can set stop limit orders. Okay, so you will set a stop limit order that doesn't expire. It'll say good till closing, right? And or GTC, and you'll see a way for you to put a price on it. Now, when you're on TradingView, you'll see, okay, that's my price. That's as low as I'm gonna go. So you go into your platform and you type in $3,010.35 is where I'm gonna sell at if the price drops down to that low. If the price drops down that low, you automatically sell it. Boom, you counted your losses. You're out of there. You're not losing no more money than what you plan on losing. You get to live the trade another day. All right. But what if you're right? What if you're right? If you buy it right now and the price goes all the way up to the resistance level, which is your first target, you make 4.68%, right? So you make 4.68%. Now, in this particular scenario, this is another tool that I'm about to use. You go to the side, all right, and this tool right here is the measurement tool for your position, long position, short position. And in trading, going long is a bullish position. Going short is a bearish position. When you go short, you think the price is going to go down. When you go long, you think the price is going to go up. So the long position tool, all I have to do is click my entry wherever I'm trying to enter at, right? And then I can expand it to where my target is going to be. So let's say I think it's going to go to resistance level 1. This is your open P&L right here. All right. This is your risk and reward ratio right here, 102. So 102 is a positive number because what it's telling me is my risk to reward ratio is a 1-to-1. Basically, for the amount of money I'm willing to lose, I will potentially gain that same amount or more. It's green, it's 102. That's a positive number. That's a good measurement. I would like to be in a position to where I have a 2-to-1 is great. A 3-to-1 is perfect. A 4-to-1, 5-to-1, that's amazing. A 1-to-1 is acceptable. Right now, you at a 1-to-1 or 102. So you're in the positive right now, right? All right. So if I move this bottom up, it gets better for me now. So if I move it up to here and say, all right, if the price drops and it comes all the way down to the pivot, I'm getting out. I don't want to take no chances. That right there just minimize your risk even more. Now you at a higher risk to reward ratio. What if I say, you know what? I think it's going to go all the way up to R2. I'm going to put my risk to reward up here. Now you at a 2.5, and that's super good. All right. That's almost a 3-to-1 risk to reward ratio, right? So what that means is you've got your percentage here gain, you got your loss here. If it goes up to your target, you make 6.81% on the $500. If you lose, you lose 2.69% of that $500. This is how you stay healthy when it comes to trading and managing your position. Now, if I'm right and I make 6.81% return on that, I made $34 today. That's just today with $500. You put your money to work. What if I put in $1,500 today and I make 6.81% today? I made $102 today. You make $102. You make $102 3 or 4 days a week in a bullish market, which is very easy with crypto. All right. 5 days a week, you make $510 that week. Now the next time when you trade, you coming in with $2,000 now. Now every time you get into a position and you're right, you end up making more profit. That's how you grow your account. And that's how you be smart about growing your account, by limiting your losses, all right, and making sure your risk to reward ratio makes sense. If anybody needs me to go through that and explain that a little bit more, I will, okay? But now, let's say, for instance, you're one of these individuals who want to trade multiple coins for whatever reason. You make sure if you're holding multiple positions, you use the same situation with each of them, right? So that way you are putting yourself in position to where you could get the gain on all the other coins that you want, but you're not overdoing it to the point to where you're risking all of your money. You managing your position because you have a limit on how much loss you're going to take on each position you have. All right. And then you have different ways you can manage your portfolio and stuff like that. We can get into that too. But this is the basis of what I wanted to show you. So this is for my people who've just been dying to day trade. Day trade this because this is easier. Why is it easier? Because it's telling you where it wants to go. Now, if you would have got in here, you didn't have to do all that. You would have been straight. You could have swing traded it, or you could have got in and out, whatever, right? But the same methods apply on each platform, on each time frame. So the chart pattern cheat sheet, the candlestick cheat sheet, the setups, the moving averages, all that stuff applies on the smaller time frame. So let's look at the 50-day moving average. Let's look at the 50-day moving average. All right. Let's focus on this sequence right here. All right. Now let's go to the daily and see where it's at. All right. So check this out, right? So this is for the individuals who say, man, I'm late. I'm too late. The price is too high. Look, it's breaking. It look like it might drop. And let me rewind. I'm gonna rewind so we can proper context, right? Proper context. Man, I'm late. It broke out already. My man said when it crossed the 50 and it break out of the chart pattern and it bounced off of the support and I get the double bottom, I'm supposed to go in. I was on vacation for 1, 2, 3, 4, 5, 6, 7 days. I was on vacation for a week and I didn't get in. I'm late. What do I do? Do I just sit on my hands and not do nothing? Like I don't know what to do. Now, listen, you day trading. You have the opportunity to day trade because this stuff don't close. At some point, it's going to slow down. At some point, it's going to give you an opportunity to jump in. All you have to do is go to a smaller time frame and look and see what's happening. So now we're on the daily chart monitoring the day-to-day action, right? The day-to-day action gave me a bearish candle. Damn, out of all of these days of bullish movement, it finally gave me a huge red candle. What am I going to do with that? That's my opportunity to buy because look, it's a bearish market. It's a bearish market. Why is it a bearish market? Because the 50 moving average was above the 200 when it broke out. Even though it's going below it, it's not below it to the point to where it's straight down and the price is still up. So until this price goes all the way down below this and the 50 is down below the 200 moving average, now I'm fully bearish and I'm not looking for any buy opportunities, but that has not happened yet. So when I see this red candle, only thing in my mind, I'm looking at how far is this thing going to drop? How far is it going to drop? This is 1 day, right? So let's go to the hour chart and monitor this day. Let's monitor this 1 day. This is the 1 day that we're looking at, right? We're monitoring this day and we're looking at what do I see? Is that a double bottom? Is that a double bottom right there? It looks like a double bottom. How am I going to respond to this double bottom? How did I respond? How was I supposed to respond to the double bottom the last time when I was on vacation? I missed the opportunity and missed the double bottom, missed the breakout of the 50 moving average, missed the breakout of the chart pattern. And now I'm at a point to where I got a red day, but it looks like a double bottom right here. If I'm using the strategy like I'm supposed to, I'm looking for a buy opportunity if everything else adds up. So now 50-day moving average on the 1 hour chart. You're going to use the 50-day moving average on the 1 hour chart in a bullish market as a signal for you to buy. That's your signal for you to buy during the day. All right, for a day trade or even an entry for a long-term position. Okay, so check this out. Also, we know the pivots, but this is the day that we're looking at. This is the bearish day. So on the bearish day, what happened? It opened up above the pivot, right? And maybe you're looking at it like, okay, I want to get in. I want to get into this. My man said, if it opens up above the pivot, then it's probably going to be bullish. I got a 70, 80% chance that it goes bullish, but it's not 100%. I want to trade this. Let me put my $500 up, all right, and see if it makes sense. Now, if I'm using the pivots and I put my stop loss here or my stop limit order here and my first take profit here, my risk to reward don't make sense because I'm risking more money than I could potentially make. I'm gonna lose 3.22% compared to 3.01%. That really don't make sense unless I wait until the price drops down lower. And if I do that, then now I'm really risking it because now it's already crossed the pivot. If it crosses the pivot, it's probably gonna keep dropping. So I'm gonna pass on this. I'm not gonna jump into that because the risk to reward don't make sense. I'm gonna end up losing more money than I could potentially make. I'm gonna sit this out. Plus I saw the red day open up. Let me just chill and see what happens this day, right? So now, boom, I was right. It went down. It went down to support level 1, and then it actually dropped and almost went down to support level 2. Stopped right here. Went up a little bit, came down, stopped again. Looks like a double top to me. I'm sorry, looks like a double bottom to me. Let's see what happens tomorrow. Tomorrow, it opened up red, as you saw, but then it came up again. Now I got a new pivot. The support level is here, the resistance level is here. If I put the position tool on here, the risk and reward for a long position still don't really make sense. It still don't really make sense. But I'm gonna keep my eye on it. I'm gonna keep my eye on it, right? So now I'm looking at it and I saw the double bottom down here, but I wasn't willing to get in until I saw how it was looking on the pivots. Plus I needed to cross the 50 moving average. So I didn't get those two signs. I got this signal here, but I got a negative here and a negative here because it didn't really cross over and close. It didn't close. It gave me a wick, but it didn't close above the pivot. And it didn't close above the 50 moving average. So I didn't get into this trade. Plus my risk to reward ratio wasn't right. I didn't get into this trade. So I'm still watching. I'm just watching. Oh, what happened? It crossed the 50. Now, it crossed the 50. It crossed the 50 moving average and it crossed the pivot, right? Huge bearish candle. I'm sorry, huge bullish candle. Closed it. It almost hit the resistance level. What am I going to do with this information? This is the daily chart. I'm sorry, this is the 1 hour chart now. So this is 24-hour sequence right here. So now you got to start adjusting your mentality and saying, how bad do I want to get this money? It looks like it's about to be bullish. All right. Do I want to jump into this? And if I do jump into this, how am I going to measure my position? Am I going to jump in here and put my target at resistance level 2? If I put my resistance level 2 here as a target, where's my support? Is my support going to be here at the pivot? Right below the 50 moving average? Where my trigger is at? If so, that's a pretty good risk to reward ratio. I might be willing to take that trade, potentially risk 2.47% in order to gain 4.72. That might make sense. Let's see what happens. Let's see what happens. Boom, I hit my target. I made my 4.72. I'm out of that trade. I'm done for the day. Right? Now, let's keep watching to see what happens for the rest of the day. All right. Now, you got a new day. All right. Can I win 2 days in a row? Can I win 2 days in a row? It's highly possible in a bullish market because when you saw what happened when you was on vacation and you missed it, all these bullish days, that's letting you know that it's time for me to tap into Ethereum again. It looked like it's about to break off and hopefully it might do what it did in January. I'm gonna want to miss the ride. So what I'm gonna do is I'm gonna wait for an opportunity to jump in. I was on vacation. I got my red day, which red days are days where things go on sale. So when you see a sale, you need to operate the same way you operate when you go to the mall and you're ready to spend some money. You see a sale, you see a discount, you buy it. No questions asked. You try it on, it fits, you pay for it, you get it, you put it in the bag, you out of there. You got to do the same thing with this market. If you're trying to make money and you see red days, you need to look at that as a sell opportunity if all the other stuff makes sense. All right. Now, you got in, you got your money on day one. The day you came back from vacation on a sale day, you got it in at the right time and you good. Now we back to the daily chart because it's a new day. It's a new day. It's a new day. So we got to look at the daily chart and see what's happening on the daily chart, right? On the new day, you saw it opened up here and it dropped a little bit, all right? And it went up. Now, the day ain't over yet. So let's just act like the day ain't over yet and go to the 1 hour chart and see what's happening. Now, look, it opened up red, like I said, it opened up red and it dropped a little bit, all right? But it opened above the pivot and it's still above the 50-day moving average, okay? So for those of y'all who are looking at this like, man, you tripping, why'd you sell? Why'd you get out? I know you day traded and you hit your target, but what if it's Ethereum? What if it keeps going up? Why would you get out? Why wouldn't you hold it? It might go all the way up to $4,000 on that day. You would have missed out on all of that money that could have been made just because you got out, because you got a 4%, 5% return. Like, why would you settle for a 5% return when you could possibly get a 50% return? Why would you get out, right? You're using the 1 hour chart for more than one thing, an opportunity for you to get in and an opportunity for you to get out. So what is your way of getting out? Not only do you use the resistance levels to help you get out of a trade, but you can also use the moving averages to help you get out of a trade as well. If you use a scenario of you getting in when it crosses, and then when it crosses back over, you get out. If you're one of these individuals who want to hold it because you think that it's going to continue to go in an uptrend. You was on vacation for a week and missed all that bullish movement. What if it happens again? You don't want to get out too early because you want to get all that gain that you lost the last time, right? So that's what you do with the 50-day moving average on the 1 hour chart. If you get in when it crosses above on a long position, you can use it as an opportunity to get out when it crosses below to close your position, right? So let's just see what happens in that scenario. You still in because it didn't cross yet. You still in because it didn't cross yet. Even though this wick came here, right? This wick, it came down here a little bit. It didn't close. So when it closes below this, meaning the body closes, when it closes below this, that's when you get out. It didn't get out yet. It didn't close. So you're still in. You're still in from your entry back here, right? Even though you see this wick, right? It didn't close. It's just a wick. It closed here. It didn't close down there, right? So you still in. You still in. Now I would have got out right here, but you like, man, you tripping. I'm not getting out. It's Ethereum. I'm staying in. The 50-day moving average is moving up. You're still in. It hasn't gotten crossed yet. You're still going. You're still in. You're still in. That's 3 days now. 3 days of collecting. 3 days of collecting. 3 days of collecting. And now you're still here. So in this scenario, you would have got in here. You would have got in here when it crossed, and you would have held it all the way up until today, right? That's 3 days and 13 hours, 25.62% gain when you got back on vacation because you missed the first entry, right? So that's the sequence on the 1 hour chart, using the 1 hour chart as entries for you to get in on a day trade and for you to potentially get a long position long term, and using this as a signal for you to get in and get out using the 50 moving average. Now, it can be dangerous because what you can do is end up in a situation like back here where you got in here and it went up and you're like, damn, it's dropping. And then you look, so you would have had opportunity to sell, but you didn't because you're using this rule. And then it came all the way down and you got scared when you saw this wick and you closed it and basically took away all your gains. That can happen. So be careful with that. In order to protect yourself from that, you can add 2 more moving averages. The 2 moving averages that I'm talking about now are exponential moving averages. So go to your indicators, type in exponential, and you'll see moving average exponential. Click it once, Click it twice. It'll pop up over here. The first one, you want to adjust it, put it at 10. Style, change the color however you want. The second one, you want to put it at 5. Change the style however you want. Now, you got the 5 and the 10 EMAs. These are 5 days of previous price movement, 10 days of previous price movement. Now, you can use these as a trigger to help you get out and potentially get in early. When the 5 and the 10 crosses, when the 5 crosses over the 10-day, that could be your first signal to get in. When the 5 crosses below the 10-day, that can be your second signal to get in. Now, how am I supposed to know when all this stuff crosses each other? All you have to do is right-click the moving average. You'll see add alert on EMA 5, boom. You click it, EMA, close, crossing. You got the value here, hit it, EMA 10. So now you got condition, crossing the EMA, 5 EMA, crossing 10 EMA, all right? Open-ended so that it never expires. Notify on app, you can get an email. If you go down, you can adjust the sound that you want to hear. You can send it to a text message. You're never going to miss this. You're going to get it everywhere you need to get it. Create the alert, boom, it's done. So now, every time these two moving averages cross each other, that's your first sign to do something. At least look, right? So let's say if you use that in this scenario and you got in when it crossed the 50 and you got out when the 510 crossed. If you would have used that in this scenario, you would have got triggered right around here and you would have made 6.35% and you would have got out at the right time, potentially. If you using, if you want to make sure that you get out on a day trade. Boom, that was a perfect day trade. Let's see if it happens again, right? The 510 crossed here, you might have got in late because you probably missed this because remember, it's a lagging indicator. So the price will cross first before the moving average does. So you might have missed this huge candle right here, but let's say you got in late and you got in here. Well, you probably ain't make no money this time. You might have even lost money that time, right? So that's why it's very important for you to jump in when the 50 gets crossed, not when it's just a 510 cross on a regular situation. You want to catch it when the 50 gets crossed on the 1 hour, all right? Now, if you're late and the 50 crossed and the 50 doesn't get crossed back over, but you still win a day trade, like today where we're at right now, you have to use these pivots to help you to determine where you think it's going to go. In this case, we'll have to wait and see what happens for the rest of the day. It's 8:44. Y'all not about to be up 24 hours, waiting on something to happen. So what else? The next thing you can do is set price triggers. All right. So you can set price triggers and tell yourself, look, it's moving sideways right now, but it is above the pivot point. Let me see if it goes up and it continues to go up. I think it's going to keep going up. So let's just say, for instance, I'm going to set my alert to like 3,192, right? So I set an alert. All I did was go to the side and hit this little plus sign here. I hit the plus sign, add alert at this particular price point, boom, and I set the alert and it's there. So now I'm telling myself, look, I don't know what it's about to do, but if it goes above this price point, it's probably going to keep going up. If I get an alert here, I'm buying it here and I'm going to trade it all the way up here. That's your day trade for the day. And looking at the risk to reward, if I put my entry here, I'm looking at a situation where my risk to reward it has to make sense, all right? So if I'm going to take this trade, then I'm going to either need to expand my my target to here or keep it here. Either way, I'm looking at a situation where I make more money than I lose. And if I'm wrong, I'll lose 3%. Now, that might be risky for you to just go out on a whim and risk 3%. But if you have a bullish outlook on it and you've done all your technical analysis and you looked at the daily chart and you see that the day is green already, which today is not, but let's just say if it was green already and you got a good feeling about today, then you can go ahead and get in. Now, on most days, it starts out red. Just so you know, all these wicks is not one single candle on here that doesn't have a wick. What that means is it's not one single day that Ethereum doesn't open up a little green and come down. So don't be alarmed when you see the top of the hour happen, and in the first 2 or 3 hours, Ethereum is red. That shouldn't alarm you, right? It's a pattern that happens over and over and over again every single day since the beginning of time. You're not going to see any candles on Ethereum that don't have a wick on the bottom. They always come down during the day. You just got to catch it at the right time of the day. And that's what these indicators will help you do. They'll help you catch it at the right time. Now, periodically throughout the day, you can just glance at it and see where it's at. All right, you got the TradingView app on your phone, or you whatever platform you're using, you just glance at it every day or throughout the day, you know, every 3 hours, every 2 hours, and just see where it's at. That's what I do. I go to the mall, check my phone. Oh, okay, boom. I'm at the gas station, check my phone. Okay, boom. I'm back at home at the crib, walking around, check my phone. All right, boom. I'm seeing where it's at. I'm seeing what the candle look like. If halfway through the day the candle look like this, or the candle look like this, then I got to make a decision. Do I want to jump in or not? Let me look at the 1 hour chart and see where it's at pertaining to the pivots. Okay. Where the moving averages are at. Okay. Does the risk to reward make sense? Nah, I'm gonna sit this one out. Let's see what happens tomorrow. That's it. That's it. Somebody had a question earlier. Let me address any questions before I keep going. And now I'm glad this class is recorded, so you're gonna probably watch this class 100 times, but that's what it's for. All right. Unmute yourself and ask the question if you have one. Andreas, you got a question? Go ahead, boy. Go ahead, bro.
Hey,
Yeah.
I've got it to work one time, but when you was showing the risk to reward ratio, how did you do that? I'm gonna go back and look at that again.
Yeah, so go to the side, the left side. All
Yeah.
right. And you see 1, 2, 3, 4, 5, 6, 7, the 7th option on here, right above the smiley
Yeah.
face. Click the arrow, and then you got long position, you got short position. Now, in order to save yourself time, you see I got these stars right here, right?
Right, okay.
When you
I
click
couldn't
this,
remember how to do that.
but when you click the star, it's going to automatically make a toolbar for you.
Okay,
So when you click the star, it's going to pop up on your toolbar. You see how I got this toolbar? This is all the stuff that I use frequently.
got you.
So everything in here that with a star by it, it automatically gets popped up onto this toolbar. So now I can just keep this toolbar on my screen. I don't have to keep going over here all the time.
And my toolbar just popped up. I appreciate that, man. Thank you.
There you go. So now, boom, click it on the toolbar, click it on the price point, move it up, move it down, move it however you want to move it. All right, and then boom, there you go. So now you can see that. Now, for those of y'all who want to use Gemini and connect your account in TradingView, all right, you just let me do that again because I know that was pretty quick. You go to the bottom of the chart, and then this little arrow right here at the bottom it says show on the right bottom side. You click that, this will pop up. All right, Gemini, boom, you hit connect. Okay, it'll connect your brokerage account. All right, now once your brokerage account is connected, how do you trade? Same way. Here's my position tool. Boom. Now, when you're in your brokerage account, what's going to happen is you're going to get to the point where you could double click this or even right click this, and it'll say open position. When you click that, it'll pop up on the side right here where it have a position thing going, and it'll look, you know, I don't have my brokers connected right now, but it'll open up right there, and you'll see all of your information as far as how much money you got and what position, how much money you want to put into each position, where your position is at, blah, blah, blah. And then when you click trade, it's going to trade. Now the stop loss is going to hit, that's your stop loss order is set. Your take profit is set, and boom, it's going to be there, and you can just watch your money get made or get taken away, however you do it. And it's going to be there for you to see in this platform. You don't have to exit this platform to trade. All right. And then Coinbase, similar situation, except on Coinbase, you're going to type in the numbers. All right. And then, you know, on most other platforms are not going to have this type of position tool for you to use. That's why I love TradingView. You're not going to have this type of position tool to use. You're going to have to manually type in each number in each position in each order. All right. Sometimes people don't like typing in their take profit. They want to keep that open just to see where it goes. But also 100% every single time, 100%, absolutely, you must put your stop loss order in. Don't ever trade without a stop loss order in. All right, we're here to learn how to make money, not lose it. Yes, we're going to lose trades from now time to time, but if you use the strategy that I just showed you, you're only going to lose a percentage of the money that you have, not all of it. Most people lose all their money. That's how they do. I don't know why, but they didn't take the time and the effort to go and find all the information that they needed to be a successful trader. So they take their little $500, buy Bitcoin in January and never sell it. And then in March, in April, they lost their whole $500. And then they sending me DMs asking me, what should I do? I don't know. You know what I'm saying? You should have had a stop loss. So always have a stop loss, always. Unless you're an individual who has a long-term outlook on it and you just want to keep it and you have the wherewithal to take those L's, then cool. But for most of us, we can't afford to just be sitting on an L like that. If you're going to take an L, just take a percentage of what you have in it, not the whole thing. All right. That's my rule for you. I hope you abide by that. Now, that's Ethereum. Let's look at Bitcoin real quick. All right. Now, Bitcoin. Now, what did I say? The 50 moving average is above the 200 moving average right now. So technically, we're not in a bullish market yet. But you can see the price has exited the chart pattern. I have support marked here. Support was established back in January. Boom, drop down here in May. Boom, drop down here in June. Boom, drop down here in July. Not necessarily a double bottom, but it bouncing off of support. I got a 50 moving average here. Price crossed the 50. What day did the price cross the 50 moving average, guys? July 24th. What day did I tell you to buy Bitcoin? July 24th. So now you know why I told you to jump into Bitcoin on July 24th. There's no longer a secret. You have the information now. You're able to use it the same way I used it. So because I told you to buy Bitcoin on July 24th, I put you in position to gain 22% return on your money. And I told you when I got out. Why did I get out? There's multiple reasons of why I got out, but the main reason is because I got this 200 moving average right here, and I got this chart pattern resistance right here, and I saw these two small candles move sideways 2 days back to back. First of all, huge wick right here. What does the wick mean? On the top. Usually the wick be on the bottom, right? This time the wick was on the top. What does that mean? That means that the price opened up right here. It went all the way up here. And then all these people started selling their Bitcoin and it dropped the price all the way down. And then it closed right here. When you saw that, that let me know that the buyer's momentum is definitely slowing down. Everybody's selling their Bitcoin. Who is selling their Bitcoin and why? Think about it. All the people that was back here buying Bitcoin held it all the way up here and it dropped on them. They was pissing on themselves for 3 months, trying to figure out if they was going to sell their Bitcoin or not, and hoping and praying to God that it didn't drop below where it did. They basically at break even, right? So these are the people that were selling Bitcoin up here because it finally jumped up. I'm finally got some profit. I'm not about to stick around for that ride to happen again. I stressed myself out this whole time and it finally went up a little bit. I'm taking it, I'm getting it out, and I'm never going back to Bitcoin ever again. That's who sold Bitcoin right here. All the people that said that. I'm never going back to Bitcoin ever again because I had to deal with all of this and I don't really know what I'm doing. It went up a little bit. I'm getting out. I'm done. That's who sold Bitcoin. Also, the day traders, the people who are going to do what you just learned how to do. Some of those sold that day too. But look what happened though. It kept going up a couple more days and then boom, it dropped a little bit more, but it didn't drop so crazy, right? So now, you have the chart pattern. It broke out of the chart pattern, but then you got the 200 moving average right here. It's definitely going to break above this 200 moving average. What do you do with that information? What do you do with that information? Now, it would depend. What do you do with this information will depend on the day. The day looks like it's about to be enough steam for it to actually get above this 200 moving average. It's not a guarantee, but in order for us to make sure that we don't miss it, all we have to do, right click the candle. Now you got Bitcoin in here crossing 200 moving average, create alert. I already had alert set, but I just did for the example. All right. And I can erase these. Now, we're first, same scenario. All right. First, we're looking at the monthly pivots. All right. So we change this to monthly. Now we see where our resistance is at. This was the support. You see it opened above support, came below it a little bit. All right. And this is the monthly. So it came below it a little bit, went above. All right. And then it broke out and now it's at the 200. So if I wanted to buy Bitcoin, this probably would have been the time to buy it right here, but not so sure that it's actually going to get to the resistance level because we have resistance here on the moving average. We got resistance here on the trend line. And when you have this type of resistance and your trend line is solid, all right, you see it's solid, it works. Every time it gets there, it goes down, get there, go down. It might get here and drop again. So you have to protect yourself from that. Plus you got the moving average here. You see it tried to cross, it didn't cross, it dropped. It went up, it almost crossed it again, it dropped. So it could get here and then drop again. It could happen, right? So you protecting yourself. Maybe you don't want to jump in here, but you're on the monthly though. What does the daily look like? What does the daily look like? Let's go to the daily and see what the daily look like. All right, we go down to the daily and we turn the daily on. Now, where we at? Well, on the daily, we're not late though. On the daily, we're right on time because the day just started. We only you know, what, a couple minutes or 48, 58, 30 minutes, 20 minutes, I don't know, however many minutes for the day just started. But this 1 hour candle is about to close in about a minute and 40 seconds. It opened up above the pivot point. A wick came down. It stopped here. And then the buyers came in to push it above the pivot. Where do you think it's going? For those of y'all who are in the stock chat or in the crypto chat on Thursday, was it Thursday? Yesterday, I told you where Bitcoin was going. I said Bitcoin is going to go up to whatever price, right? Scroll up in the chat and I told you that. How did I know? How did I know that it was going to reach that target for the day? The damn pivot points is right here. That's what I use. And it actually went there. So yesterday, when I told y'all the Bitcoin was going to go to, what I say? It was going to go to, let me pull it up in the chat. I don't want to make up nothing. Pull up the chat so I can see where I said. Man, y'all be talking, huh? All right, let me see. Boom. Here we go. Here we go. Bitcoin may go. Okay, boom. So look, yesterday, 8:18 a.m., Bitcoin may go to $42,964 today, ... That was, let me see, go back another day. Boom. Resistance level 1 on August 5th was $42,963.36. So I told you where the pivot was at, basically. And guess where it went? Right to the pivot. And then it stopped. So cat's out the bag. Now you know my secret. All right. Now today we got a new day. Where do you think Bitcoin is going to go today? If it's bullish, it might go all the way up to $45,753. Let's see how much money we could potentially make. We might be able to make 2.69%. That's good money. That's easy money. That's easy money. 2.69%, especially if I have a potential risk of 2.20. that's a risk to reward ratio that might make sense, especially when the price is dropping like that. So if the price is dropping, that means I'm getting a better price. That means I'm getting a better price. All right. So I put my risk to reward to where like right underneath the pivot just to be safe. My entry somewhere around here. My first target right at the resistance 1. Give myself the opportunity to make 2.69%, but I'm risking 1% to get that. So I got a 2-to-1 risk to reward ratio. I'm taking that every time. Now, as the price drops, I might lower my entry, but I'm not entering yet. I just want to see how far low it's going to go, right? Is it going to stay above the pivot or not? My ideal situation would be to jump in, right? If it gets all the way down to the pivot and stops and starts to turn around, I would love to catch it right here. I would love to catch it right here because that gives me more gain. That's a sale. But if it pauses in this range and then starts going up, then I have to catch it up here somewhere. And if I catch it up here somewhere and I get in and it starts going up, there's nothing wrong with moving your stop loss up a little bit. As you have as you get in profit, you can move your stop loss up to lower your potential risk in case it turns around. But you really want to hold everything until it gets to your target. You want it to get all the way to your target. All right. So boom, that's that. All right. Does anybody have any questions about the pivots, the moving averages, the chart patterns, the candlestick patterns, the daily charts, the 1-hour charts? Anybody got any questions about that? Raise your hand. I've seen some hands raised, but then they went away. So if you have a question, go ahead. Hendrik, you got a question? Oh man.
Was it at all?
Yo, what's going on? Is that my internet or is that y'all? Is that me or is that y'all? You breaking up bad, bro.
No, I think that's it, just his.
Okay. All right. So just type in your question for now, Hendrik, and then I got you. Does anybody else got any questions? And the chat is going to be open anyway. So if you need any help as far as setting up your charts, looking at TradingView, all that other stuff, just let me know. Hendrik, type your question in because I can't hear you. Does anybody else have any questions? Anybody? Yeah, I can't hear you, bro. You're gonna have to type your question, Hendrik. If you can. You can type it in the Discord too. I can see the Discord, so. All right. So that's all right. So I just went through Bitcoin. I just went through Ethereum. Now, obviously, there's other indicators. For right now, we're not gonna get into all those. Just know that for those of y'all who are in my stock trading class, we like using the RSI. When you're dealing with the RSI with crypto, it can be tricky because crypto can get to the overbought and stay there. It can stay there. So you can't necessarily use just the RSI to help you get out and in the trades. The crypto market is very tricky when it deals with the RSI because when it gets overbought, it can just stay in overbought territory. So don't use that alone just to help you. You can still use it, but that shouldn't be your only measure of what's happening. Now, if you are going to use it, you can see that there's a little bit of divergence here with Bitcoin as this high point is lower than this high point on the chart, but this high point is higher than this high point on the RSI. So there's a little bit of divergence, but you see where we at. We had a 200 moving average. This is resistance. If it drops, there's no surprise. Plus, it just broke out of a chart pattern. And for those of y'all who are new, when you see these cryptos break out of chart patterns, just know that there's a potential that it could retest that same exit area where it left. So it exited this area. It could come down to test this area again before it takes off. All right. That's a high possibility that it could come down to test this area a little bit and then take off. It could come down and drop all the way back into the chart. You know what I'm saying? Bounce off the 50 and go up, or come down, break the 50, come all the way down to support and go up. It could do all of that. So all of those possibilities are there. We're just trying to figure out where, if it does stop, where is it? If it does drop, where is it going to stop? If it does drop, it might stop right here. If it does drop below here, it might stop right here. Like that's where we're trying to figure out where it's going and how we can get a position and protect ourselves. All right, so we use the pivot points as something to help us measure our position for the day, for the month, even for the year. You can put the pivots at a year if you want. If you want to really go long term, you can do yearly, you can do weekly, you can do monthly. All right, for trading, you can go weekly, and then you can go to the weekly chart. Or I'm sorry, for the daily chart, you can go weekly, and you can go monthly. All right. All right. If you're on the weekly chart, you can go monthly, and you can go yearly. All right. So you can see same situation where the where it opened up above the pivot on the year, and then you got target 1 here, target 2 here. And if I expand this to the R3, you'll see that Bitcoin almost went all the way up to resistance level 3. These pivot points get created before each, I'm like right on the beginning of each time sequence. So that's why I'm telling you, listen, this is what we do. Look, if we go all the way back, and we can go farther back. If we go all the way back here, right? This is December 28th of 2020. Okay? December 28th of 2020. We know that the first resistance level is 41,000. We know that the second one is at 48,000. We know that the third one is at 67,000. So don't listen to these people out there that's telling you, yo, Bitcoin gonna go to 100,000 this year. You see the resistance levels already. The likelihood of it going to $100,000 is slim this year, because there's no, like, if the resistance level 3 was at 100,000 or resistance level 2 was at 80,000, then maybe, yeah. But the resistance level 3 is at 67,000. So if it gets there, then the likelihood of it going beyond resistance level 3 for the year is very, very, very slim. It's probably not going to do that. For most cryptos and coins, it probably ain't going to go below resistance level, go above resistance level 2 for the year. So people just be talking. It don't even make sense because they don't understand technical analysis. You understand technical analysis now. So this is how I go. December 28th, we're going into January, we're going into 2021. You already know that Bitcoin gonna go to 41,000. So now you ain't gotta worry about it. You can go ahead and buy your Bitcoin right here and hold it to see if it's gonna go beyond 41,000 or not. And then in the meantime, you could take some extra cash and trade it along the way because it's extremely bullish. You got in back here like you were supposed to, you would have been able to ride it all the way up here. And then when the new pivots opened up for the year, you already know what time it is. You're like, oh shit, I'm about to get paid. What is the price increase? And this is for the people who got into Bitcoin and stayed in Bitcoin and lost all their money and couldn't wait for opportunity to sell a couple of days ago. You made 78% for the year on Bitcoin because you bought it at the right time. Now, you finally got all the way up to R1. Maybe at that point, you sold some of your position. Maybe you trimmed like half of your position down, paid all of your bills. You still got a position left, but you done paid all your bills with your profit, right? Just to see what happened, right? It already got to resistance level 1. Is it going to drop all the way down to the pivot? I don't know, but I already saved some of my position. So let's see. Oh, it's at resistance level 2. I'm gonna go shave some more down. Now I'm gonna save a third of my position or a fourth of my position. Is it gonna go to resistance level 3? Let's see. Oh, it's going. Is it going? Is it going? Is it going? It can't get there. It can't get to R3. It can't get to R3. Now we still know our techniques of when we want to get out, right? So what is our trigger when we want to get out? 5, 10 EMA cross on the weekly chart. So every chart that you use an alert for, you have to make the alert for that time frame. So if I set an alert for the 510 to cross on the 1 hour chart, that's where it's going to be. If I set an alert for the 510 to cross on the monthly or the weekly or the daily chart, that's where it's going to be. So if you're waiting for the 510 to cross on the weekly chart, you need to set it for the 510 to cross on the weekly chart. All right. Now that's what we're waiting for. We're not getting out to our full position until the 5 crosses below the 10, right? But at this point, we done already made 166% return on our money though. Now we're just trying to figure out if we want to get in or get out or not. And we're going to hold it until the 510 cross. All right, boom, 510 cross, we out of there. So now let's just say we held our whole position until that happened. That would have gave us about, maybe we caught it here. We still got 100% return on our money for the year. And now we sitting back watching everybody crying. Everybody else crying, they crying. No, it's not going all the way down. It's not going all the way down. We believe in Bitcoin. We believe in it. We believe in it. It's staying with us. Staying with us to the end of time. You already made your profit. All right. And you now you're looking at it like, what, is it going to cross below the 50? Is it going to cross below the 50? If it crosses below the 50 and close, I might look for another position. That's your mentality versus everybody else's mentality is two totally different situations. You know what you're looking at. Everybody else is just guessing. All right. You see clearly now. You just took the blindfold completely off your trading life. All right. Or whatever, your vision. All right. So this is where we at now. Somebody said something about taxes. So look, you hear all this news about taxes with Biden and what they're trying to do with the crypto and the digital currency stuff. Just set aside 30% of your gains. All right. Now, when you go through the tax filings, when you go through the tax preparation in January or April, whenever you do it, just make sure you understand that all the losses that you take are going to be in the equation as well. So you're going to be able to offset a lot of your potential tax liability if you are taking some losses. All right. For those of y'all who trade with me with stocks and whatnot, it's all the same. So, you'll be able to get the statements for whatever exchange that you're in. So if you're in Gemini, you'll get a statement every month. If you're in Coinbase, you'll get a statement. Binance, you get a statement. Whatever exchange you use, just make sure you go into your account preferences and get the statements for your stuff. And plus, it's easy because you know how much money you put in, and at the end of the year, you'll know how much money what your balance is. If you're still holding, right? If you're still holding long term, it'll be a little bit more beneficial for you because you can I can't remember the word I'm looking for, but you can basically push back your tax liability if you're a long-term investor. All right. There's incentives for you to hold stocks and crypto and all that stuff long-term rather than trading. Every single trade is a taxable event. So if you're day trading and you're getting in and out during the day, which really you should really only be holding one trade a day. It shouldn't be like, oh, I'm getting in, I'm getting out. Oh, I'm getting in at 12, I'm getting out at 2. I'm getting in at 3, I'm getting out at 4. Like, no, don't do that because every single trade is a taxable event, and it's just gonna put more stress on your CPA or your tax preparation person. So listen, one trade a day is enough. I just showed you the formula. All right. Use the pivot points. If the risk to reward look good, boom. If you take an L, just take the L and leave it alone. Now, if you take an L because it crossed below the pivot and then 2-3 hours later it crosses above the pivot and you want to try again, all right, cool. Try again. If it's bullish and you got bullish outlook, all right, cool. Try again. But if in most scenarios, in most cases in a bullish market, if it opens up above the pivot, it's probably going to go to the resistance level. There's no reason for you to get in and get out and get in and get out and get in and get out. Just let it get to the target. You set one target, set two target. Resistance level 1 is target 1. Resistance level 2 is target 2. You shave some of your position off at target 1. If you get the alert that it's crossing back, then you want to get out your full position, get out. If it goes above the R1 and it gets to R2, okay, get out then. All right, like just be conservative about it, be smart. Don't overdo it. Don't overtrade. Because when you overtrade, you're gonna lose more money than you need to. Okay. What else do I want to talk about? Going in the opposite direction. So for those of y'all who don't want to sit and wait for a bullish market and you want to go bearish, right? You can do that, but just know that every platform is not going to give you the ability to do that. So let me show you 1 second. I'm not sure if Coinbase Pro, I don't think Coinbase Pro gives you the ability to do that. But Binance does. So margin is what you're looking for. All right. So margin. Now, a lot of y'all are scared of margin, and you rightfully so. Okay, because margin can be dangerous because you're using money that's not yours. It's leverage. All right. So when you're shorting a position, essentially what you're doing is you're borrowing coins from the platform and you're selling them at a high price and buying them back for a lower price, and you keeping the spread. All right. It sounds confusing, but when you're doing it, it's not confusing. Just make sure that the amount of leverage that you're using is not putting you in position to where you're going to owe them money. Okay. You want to be sure about what you're doing, and you want to use a percentage of the amount of money that you have in your account. So if you want to use margin, you can use it going bullish and bearish. I would suggest that the amount of margin that you're using should be no more than 5 to 10% of your entire account balance. Because if you're wrong, remember, you're borrowing money. So you're going to owe money, and you're going to owe money. You're going to owe more than what you initially tried to borrow in the first place. All right. So if you borrow $500, it's not going to come out of your account. It's their money. And if you're shorting it and you're wrong and the price goes up, you're going to owe more money than what you first initially borrowed. So if you got $1,000 in your account and you borrow 500 from them to go short and you're wrong and the price goes up and there's a 5, 10, 15, 20% increase in price and you end up going beyond your margin, you might end up owing them $1,500. Now you got to come out of pocket $500, and then you basically lost all your money. You blow up your account with one trade because you're wrong and you lose margin. You're maximizing your potential gain with margin, but you're also maximizing your potential loss too. You have to understand that. So don't ever use a bigger percentage of what you need to be using. My suggestion, if you're going to use margin, I really would say 2% for real. But you know, if you really trying to make your way out here, no more than 5 to 10% of your account should be used with leverage, and be very, very mindful of your stop losses. You have to use stop losses when you're dealing with margin, especially because you don't want to put yourself in a position where you got to pay somebody out of pocket outside of what you already have in your account. That's a no. That's the most worst position to be in. All right. Don't ever do that. Okay. Now, if you just want to be safe, just stay away from margin. It's crypto. It's designed to go up just like everything else is. And especially in today's time, and trying to pull it into a bullish market. A lot of them are already bullish. Ethereum's bullish. Bitcoin's trying to make its way up to be bullish. There's no reason for you to use margin unless you're just trying to hit a home run. You can use margin to increase your profits when going long. You can do that. But again, if you're wrong, it's going to hurt. So to be safe, just use your own money. But if you want to take it that route, it's available for you, but you got to use Binance. Binance is I already talked about Binance earlier. They got some crypto. What was it? I can't remember which crypto we was looking for earlier, but Binance is a dope platform, and it gives you the ability to use margin. Okay. Also Kraken gives you the ability to use margin too. All right. Margin trading. Okay. Margin trading. They give you 5 times the amount that's in your account. So if you got $5,000 in your account, all right, if you got $5,000 in your account, they're going to give you the ability to trade with $25,000. So $25,000 trading in trading funds can put you in position to get what we talked about, getting a 6% in one day. You can make 1,500 in one day, but you can also lose 1,500 in one day too. Now, remember, you only got $5,000 in your account. If you're wrong and you take a 6% loss, you're going to end up with $3,500 at the end of the day. That's a huge loss compared to if you was just using your own money. Yeah, you might not be able to make as much, but you're not going to lose as much either. Y'all understand that? Type of one in the chat if you understand that. Okay, cool, good. All right, so that's leverage. Now, they're telling you they're going to give you 5X. So, I mean, if you know what you're doing and you use this the right way, it could be very beneficial, because remember, if you're using your position tool the correct way and you give yourself the opportunity to make a 2-to-1 or 3-to-1, 4-to-1 risk to reward ratio, let's say you're risking 2% in order for you to make 5%. If you lose 2% on the trade, I'm sorry. If you lose 2% and you got this is with a scenario of $5,000 in your account, all right? 5X of 5,000 is 25,000. So let's say you lose 2% on that trade, you lose $500. Now your original balance is 5,000. If you lose $500 on one trade, that's not that bad. That's not that bad. So that's a smart way of doing it, all right? Don't just think about how much you could potentially gain. You have to think about how much you could potentially lose first, okay? Now, let's say in that same scenario, you put yourself in position to make 5%. That's $1,250, but that's all yours though. So now you started out with a $5,000 balance, but a good day of trading with leverage, you walked away. I'm tripping. You walked away with an increase in your account balance. Now you got 6,250. You feel what I'm saying? So that's how leverage can help you. You feel me? And if, like, imagine if you was one of these people who use leverage the way that I just showed you on the weekly chart using the year. And this is what a lot of people do. And this is how people get rich. It ain't just because they come in the game with 100 grand strong and they just threw all their 100 grand into Bitcoin and then they was there when they got 100% price increase and they doubled their money. No. Don't get it twisted. All right. Everybody ain't rich out here. Okay. It's leverage, guys. It's margin. That's how they do it. That's how they do it. So what they did was, yeah, they might have $100,000 in their account, but they're getting 5X leverage on that. They trading with 500 grand. And then they get 100% gain on that 500 grand. Hold on. They get a 100% gain on a 500,000. They doubled their money. They're millionaires now. You feel what I'm saying? You close to a millionaires now. So you came in with 100 grand. Now you got 600 grand. You do that again, you a millionaire. You feel me? And you ain't had to do nothing to become a millionaire. That's how they do this. That's how you get it in with the market. All right. Crypto market, Forex market, even with stocks, you can use leverage. Everybody has margin in their account. You go to TD Ameritrade, whatever, you have margin available. If you know how to use it, you can get rich, but it's dangerous. All right. It's dangerous because you can also kill yourself. You know what I'm saying? And that's what happens when you see these stock movies, these Wall Street movies where people jumping off the ceiling and all that because they're using leverage. What happened earlier with somebody typed the Viacom lesson? Yes, exactly. That's what happened with the Viacom dude. When everything's going good, he eating. But when the market goes bad, which you have no control over, you're over leveraged automatically because your position size is going to end up being in the negative to the point to where you got to come out of pocket to pay what you owe. And you might not have it. You might not have it. What if you put $100,000 in and you got 5X leverage on that and you didn't sell at the right time? What if you didn't know what if you ain't know Mills formula and you held this? You feel me? And you got in right here or something, like most people got in right here, right? Most people got in right here. This is January. Most people got in right here. So they didn't sell here. They didn't sell here. It dropped all the way down. What if that happened to you and you got the break even, but then this wick right here, this wick right here gave you a margin call. Why? Because that wick right there might have been a 20 or 30% loss. You know what I'm saying? You 20 or 30% loss. That's $100,000. That's all of your money. Just a 20% loss with 5x leverage is all of your money. All of it gone because you didn't get out at the right time using leverage. So I want to use this examples to let you know, yo, it's dangerous. I know some of y'all gonna be like, man, I'm going for it. It's dangerous. All right. Be smart. Be smart. Put yourself in position to get more money than you could potentially lose and use your stop losses every single time. Do not ever put a position in without having a stop limit order working. Okay. Now, it's not to say that the stop limit order might get blown past sometimes, but this is the crypto market. It's not like the stock market. The stock market be having gaps up and gaps down. Crypto trades all day. So there's really no gaps in between the price like that. As you can see, all these candles are connected. And sometimes they got wicks that connect them. Sometimes the body just opens up right next to it to the closing, but you're not going to get those gaps like the stock market. So you don't have to really worry too much about your stop loss getting skipped past and it don't get filled. That order is going to get filled if it gets hit. All right. Dana said, just block margin out of my mind. Yeah, I mean, some people go crazy. And again, I'm telling you, that's how a lot of people get rich. You feel me? You come in the game with 5 bands and you get 5x leverage. You trade them with 25,000 and you make, you know what I'm saying? You make 20% gain on that. You made 5 that you doubled your money and you use other people's money to double your money. Now you done made 10 bands and you don't need to use margin no more. Some people use it like that. Like, I'm gonna just use margin on this one trade because I know where it's going. I know where it's going. Boom, let me go ahead and double my account real quick. Okay, boom, now I'm off margin. I ain't messing with margin no more. I got my account to where it need to be, and now I'm straight. Let me trade with my own money from now. Like, if that's your strategy, you can do that too. Just know that risk is risk. So if you're gonna risk it, use your stop loss and make sure your risk to reward makes sense. All right. What else I got? It's 9:30. Trading view. How to short. Support, blah, 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 finance, crypto taxes, blah, blah. Okay, cool. Yeah, so, all right, so yeah, you got all the resources, all right? I'm gonna add a few more things into the resources so you know. Oh yeah, I did put Binance in there. So Binance is in there. Kraken is in there. Okay, cool. And then Uniswap is another one. 1 second, Uniswap, Uniswap is another one real quick. So Uniswap is decentralized, right? So a lot of these platforms like Coinbase is not decentralized. All right. Coinbase has a CEO. They publicly traded on the stock market. So the whole point of crypto is supposed to give people the opportunity to deal with some form of currency that is decentralized, no institution behind it, no CEO, no governing body to make decisions behind what happens with the money. That's the beauty of crypto, all right? Completely controlled and owned by the people, okay? Coinbase ain't on that level. They a publicly traded company. They got a board. They got a CEO. They got all that. So if the feds come through and say, yo, we need all the data from everybody on Coinbase. We're trying to make sure they pay their taxes. We're trying to make sure they ain't doing nothing crazy. Give it up. Coinbase, here you go. No questions asked. All right. They probably already got something, you know, in the paperwork to say that that's already taken place. But that's what happens when you're dealing with centralization. Decentralized trading platform puts you in position to where you ain't got to worry about none of that. All right. So decentralized is straight up owned and operated by the people. So when you have Uniswap, it has its own coin. Okay. So you buy the Uniswap coin. When you buy the Uniswap coin, you actually own a part of this entire monetary situation here. All right. The currency itself, you're an owner. All right. You have equity in this. Okay. So all these people that are working for this particular platform and getting this decentralized situation right, you're going to be able to take advantage of that and trade it as well. Okay. So check Uniswap out if you're interested. It's a good one. It's not one of those things to where it's like better than Bitcoin and Ethereum. Obviously, you look at Coin Market Cap. You check out Uniswap on here, and you can get the information for it to let you know where it's at as far as the price and compares to Bitcoin and Ethereum, the volume. You know what I'm saying? It's not as attractive as those other currencies, but like I said, you know, it's decentralized. It's the platform. You're getting the opportunity to make sure that you own a part of everything that's going on here. All right, and then it's on Binance and all that stuff too. So that's a good one. That might be a sleeper for a lot of people. Let's pull it up on the chart, matter of fact. Uniswap. Let's pull it up and see what it's looking like right now. All right, we want to use let's use Gemini. All right, so go down to the daily, and then we're gonna take this to let's do monthly first. Heaven, you got a question?
Yeah, Mel, I was wondering if you can show how to transfer the money from Coinbase to Coinbase Pro. Because
How to transfer it to?
yeah, to Coinbase Pro.
Hold on 1 second. All right, so you know what my situation is with.
Yeah. Well, it should be the same for if you want to change, I guess, through different platforms. So
Yeah, hold on 1 second. All right, so basically you need to go into your portfolio page, click the deposit button, and then you want to select the currency that you have deposited. So if you got Bitcoin in there, if you got whatever cash in there, and then you should have an option to deposit to Pro. And then you just put your amount and then hit the deposit button. Now you have to get Coinbase Pro though. So you make sure you get Coinbase Pro first.
yeah, I got it.
All right. So then you go into the portfolio, and then you should be an option there to move it. You see that?
Yeah, I see it. Send crypto to another wallet.
Do
Or-
you see Pro in there
Hold
as an
on.
option?
Hold on a second. No, not when you go under deposit. Hold on. You have buy, sell, convert, send, receive, and deposit. But when you send it, it says send to another wallet. So would that be it? Do the send?
No, it's not a wallet though. It's just a
Okay.
yeah. So it should be an option there. Maybe you need to so you
Go
do
through the-
have Pro, right?
Yeah, I have Pro. Should I go to the Pro one?
So open up Pro and see if you can open up Pro and see what the deposit options are in Pro.
Okay.
She's gonna have to go through Pro because I'm doing it on my phone and it gave me the option to pull it
In Pro, right?
from the regular Coinbase.
So you did it in Pro, right?
When you go to Pro, where do you go? You said deposit?
Yeah, go to the
Yeah,
deposit.
I logged into my Pro account. And when you hit deposit, yeah.
Okay. Bitcoin. Okay, I see it now. But
Good.
when you it's asking for the amount. Hold on. And I just want to do all of it, but it don't give you, I guess you gotta know. I don't know. I'll figure it out. At least I got that far, but I'm trying to pull everything from there and I don't really
It
give
doesn't
you.
have it listed. The total amount I have is listed.
Right. So how do you know what amount to put?
You probably got to type it. Is there an option for you to type it in?
Yeah.
Yeah, you're just gonna have to type it in. You're just gonna have to know what you got in there and type it in.
Okay. All right. Thanks. Man. Thank you.
Yeah, no problem. Thank you, Dana. Yeah, so I'm looking at Uniswap right now. Same method as you saw. I was on the daily chart first with the monthly pivots. It already had reached the resistance level 1. Let's just go back real quick in case y'all wasn't watching. So I was on the monthly pivot. All right, on the daily chart. As you can see, it crossed over the 200 moving average, which is what we're hoping Bitcoin does. It broke the R1 and it couldn't really get to R2, or at least it's slowing down, right? And this is the daily candle, just started 2 hours ago, okay? Now we're gonna go down to the daily pivots and we're gonna move to the 1 hour chart, all right? Now on the 1 hour chart, you can see what's happening in real time. It's a new day. You see that this huge bearish engulfing candle, right? Bearish engulfing candle and almost a double top. So double top, like I said, you saw the double bottom on Bitcoin, gave us the opportunity to go up. Double top on Ethereum, gave us the opportunity to go up. Now you see a double top, double bottom on Ethereum. We saw a chance for us to go in on a long position. Now you see a double top on Uniswap, bars, going down, all right? And it crossed the pivot. So, and it looked like the 510 is about to get triggered, right? So all these signs are letting us know that the price is probably going to continue to drop for the day. If you wanted to short, you could try to short here to the support level, but it is a bullish market, so you got to be careful with that. In most cases, if you want to have a long-term outlook on this particular coin, you're just going to wait for it to stop selling off. Use this as an opportunity to get something on sale and wait for it to cross back above the pivot so you can get in for a long position. Let's just say, for instance, it goes above the pivot at some point today. If that happens, you know your resistance level is here. Make sure you try to get in here. Got your stop loss somewhere down here or maybe even here if you're late. Risk to reward makes sense. Get your money for the day. Get on up out of here. So at this point, you need to be looking at this like you're licking your chops for the day though. So now, as long as it goes down, you're just going to keep measuring and see, okay, I got an opportunity to make 8% today. If it turns around, if it keeps dropping, measure it again. Okay, I got a chance to make 9%, got a chance to make 10%. Now, when it all gets all the way down to S1, if it goes to S1 and it comes back and it crosses above the pivot, now you're looking for an opportunity to buy. And then you waiting for it to cross, for the 510 to cross back below for you to get out. Or you hit your target and you get out, all right? That's what you're waiting for on Uniswap. All right, so that's an opportunity for you to trade today. What else we got? We have Bitcoin, or tonight, I'm sorry. And you can set your exits on your trading platform. So if you want to fall asleep while you're in a position, that's cool. As long as you have your stop loss order and your take profit order set, that's fine. Because you might hit your target while you sleep and wake up to money. Or you could wake up and see that it's still working and you good. That's what happens. Like that's what I do. That's my process with Forex and crypto. With stocks, you can't do that because the market closed at 4. So we good on that. But now when the market closes and you still got that itch and you ready to get some money, or you lost some money with the stocks and you looking like now you good. There's nothing stopping you from making money now. You can make money in any market. All right. Crypto is taking off right now, so take advantage. Let's look at Bitcoin. Same thing with Bitcoin. As you can see, it's below the pivot today. So today might not be a day to trade Bitcoin because you can see where it's at for the hour. That don't mean that it's going to stay like this for the rest of the day. But if we're going off of our method and our formula, it's crossing below the pivot already for the day. So now we're just looking at an opportunity for us to either catch it on sale or we're just going to hold out and wait and see what happens tomorrow. All right. And this is every hour. So every hour you can walk away. You got 20 minutes. 20 minutes. Go get something to eat. You know what I mean? Go do what you got to do. An hour later, you pull up the chart, check the chart, see where the candle's at. All right, boom. Let me go back to doing what I was doing. You know what I mean? Oh, go to sleep, wake up in the morning, check the chart, see where it's at. Because by the time you wake up, it's still gonna be like this ain't gonna close until 10 o'clock tomorrow. You feel what I'm saying? So you got until 10 o'clock tomorrow to see what's going on with Bitcoin. And every hour, if you are available, you can check to see what the status is. It's easy. It's easy. Crypto is the easiest thing to trade, yo. I swear it is. It's easier than stocks. It's easier than futures. You know what I'm saying? Forex about the same, but to me, I think crypto is easier than Forex. All right, because you don't need margin. Forex, you need margin. You don't need margin with crypto. All right, you can't get away with trading Forex without margin. It's not possible. All right, but crypto you can. So to me, it's easier. It's the easiest thing to trade in the world, and I just showed you how easy it can be. Now, take your time when we get off of this call. Go get the candle. Go get the candle trading Bible. All right, I'm about to pull it up so you see what it look like. Get the candle trading Bible. Okay. Some of them got green color covers. Some of them got a orange color with an Asian dude on it, or red cover with an Asian dude on it. All right. Same thing. This is the author you're looking for. Okay. Buy this. All right. Get it next day. Get it next day prime if you can. All right. All right. So that make sure you get that, because what it's going to do is going to give you yeah, if you see one, it might have this cover on it. All right. I think I actually dropped the PDF in there. If I have the PDF, I'll drop it in there for y'all in the chat. All right. But that's what you're looking for. This right here is going to break it down for you deeper than what I just did on this call. And obviously make sure you got your cheat sheets. All right. I'm gonna update this to make sure you have your cheat sheets. Okay. Make sure you got your cheat sheets. Tap into your cheat sheets. Get TradingView. Set up all your indicators. I got an indicator list on there. Make sure your indicator list is set up right. All right. Print out your trading notes. I got trading notes for you, just so you can stay professional and make sure you got everything in order. Damn, none of this stuff is opening. Indicator checklist. All right. I'm just gonna put the Word file in there so I don't have to keep doing all this. All right. The indicator checklist is there. All right. You got the indicator checklist. Everything is there. Everything that we went over today, minus volume, which I'm about to go over now, just real quick. All right, so this is extra stuff. RSI, stochastic MACD, do some research. You'll find out about that. You can play around with that. I talked about RSI a little bit, but like I said, it's one of those things that can confuse you a little bit with crypto specifically, because it could go way higher than the RSI will allow. All right, but this is extra, okay? But mainly you want to look at this. All right, pivot points, moving averages, and volume. All right. So volume is here. Same thing. You go into your indicators, type in volume. All right. Volume, boom. You click it one time, it's there. All right. You open it up. You ain't really got to change nothing. If you want to change the colors, you can change it. Just make sure the volume MA is visible. Okay. The MA is 20 on that. All right. So now the volume is letting you know what the volumes look like. Now the volume, when the volume peaks, it's telling you that what the potential direction is going to be for the future. All right. So you saw this huge red bar on the volume crossed over the 20 orange line. Boom. That's a sign to let you know that it's going to be bearish for a minute. Okay. Until I get some type of volume to beat this, it's going to be bearish for a minute. So you seen it. Boom. It was bearish for a minute. Bearish for a minute. All right. Now when it started breaking out, it didn't really give you much until July 21st was the first green volume bar that you got over the 20 moving average in a very, very long time. That was the first sign. All right. Then you got a few days after that. All right. Then you got a huge volume bar on the 26th. That right there happened because, remember, all these people sold that day, and then all these people bought it back to push the price back up and gave you another day of bullish movement. So that green volume bar lets you know that we're going to stay bullish on this. Even though everybody's selling it, we're going to stay bullish on this. And then you got a couple more days of bullish movement, and then a little pullback, reset. All right. And then you got another cross over 20 on the volume bar here. Just be careful. All right. Just you're looking for extremes on this. That's why you ain't really see it on my chart really, because I don't really use it that much, but it can be helpful for you. And if you learn to master it, it could get you a lot of money. All right. Outside of that, trading entry checklist. Jesus. Trading entry checklist is here. Got the trading entry checklist. This is just something to help you make sure everything is lined up. Now, obviously, we didn't use the RSI and we didn't use the stochastic, but we used all this other stuff. We didn't go over Fibonacci. I don't really think that's necessary. I mean, you can use Fibonacci with this, and I definitely use it with crypto a lot, especially with Bitcoin. But we don't have to go over all that. This is simpler than that. It can be simpler than that. Fibonacci is just another level. If you want to learn about that, just let me know in the chat, and I can give you a couple videos on that. That's no problem. All right, but this is a checklist. Boom, check that off, just to make sure you go through everything before you jump in. All right, if you want to use the 4 hours, same thing, 1 hour, same thing, 30 minute, 15 minute. If you want to go that low, same thing. All right, that's to help you out. Okay. Outside of that, that's everything I got, guys. Anybody got any more questions? Evan, you got a question?
No, I'm good. No, thank you.
Good. Okay. Well, that's it. That's it, guys. Hopefully you guys got everything you need to help you out on your journey. Carletta, you good?
I do have a question for you. If I want to paper trade,
Yeah.
can I go somewhere in TradingView to do that?
Yeah, I mean, essentially you have paper trading here available. You see that option right there? You connect your paper trading
Okay.
account. You can do that, and that's good because you can play with money, fake money. But what I
Yeah.
do is I just use the position tool, to be honest. I just put a position tool open, and then I just don't do nothing with the position and just see what I think. So I might just put a position tool on there and just leave it and just look at it periodically and see. And once the price goes into the green, I'm like, oh, I was right. I should have made money. But I mean, if you want to see those numbers, then you can just connect the paper trading thing right here, and it'll
Oh, okay.
all right.
Got you. And where did you go for that? Where did you go to get that, to pull that
Paper
up?
trading.
The position.
Yeah. So that's the on the left hand side down here.
Mhm.
You got all the way here, like right above the smiley face. This position right here, these 3 lines.
Okay.
You hit that
Okay.
arrow, and then you got long position, short position, and then you got all these other tools here. Just hit the star right here. If you hit the
Okay.
star, it'll pop up on the toolbar, and you can move the toolbar all around, and it's just going to be on the screen for you all the time. So that way you don't have to keep going over here looking for it. You can just click it here, boom, and it's there, and then you got it. All right.
Oh, okay. Perfect.
Yeah.
Thanks.
No problem. And then also you got news over here too. So on the right side, you got all the stuff here. This right here, this the alert, this is the alarm thing. These are all the alerts that you got set. All these alerts you got set. You see how many alerts I got? I got alerts with
Wow.
all kind of stuff. All right. Then you got the log down here. These are all alerts that actually go off. So every day you have alerts go off. Every day I got alerts going off for different stuff. All right. And then you have the opportunity to react depending on what type of alert you set.
Mhm.
Then you got your watch list. All right, so you can create a watch list. I got plenty of watch lists. You can create a watch list here so you can make sure that it's easy for you to get through each one. All right, just to see what each of them look like, so you don't have to keep typing everything in. Dang, who was a Dogecoin guy? Look at Dogecoin today, guys. Hope y'all made some money with Dogecoin. I didn't. So you can see everything that's going on with each one that you're paying attention to. All right. And then you have the news here. So you got the news. Boom, you got news to pop up. So this will help you too. I know a lot of y'all probably won't go to crypto market cap every day, but you got TradingView. TradingView on your desktop will show you the news. All right. So you can see that stuff updates very, very often. All right. And then all this other stuff is here. You got a community chat here. People talking about crypto, showing you what their charts are. People got predictions on here. It's a nice little community. I don't use it, but it might be helpful for you. All right. And then people have their
Yeah.
ideas on here as well, what they think is going to happen for certain Forexes and cryptos and all that. All the information can be helpful, but don't go overdo it to the point of where you start trying to follow somebody that don't know what they're doing. And then
Yeah, you get confused.
yeah. So I gave you a formula. Use the formula and tweak it to your liking and you know, make it work for you.
Okay.
But that's it. That's all I got. So if y'all got any more questions, you can type it in the chat, and I'm free. I'm gonna leave the chat open because you know we were supposed to do this for a 4-day period, so I'm gonna leave the chat open for a week or so. And if you got any questions, I can make you a screen recorded video and upload that into the chat.
So that way you have access to that, and I upload that into Gumroad back in the back end of Gumroad as well, and you'll have access to this course as long as you have a Gumroad account, and I'll just update everything there so you have it. All right. Appreciate y'all. Give me a 1 if this was a good class. Type a 1 in the chat if this was good. You learned enough. You got everything you needed. You got a good breakdown. I did a good job. Yeah, that's what I like to see. Appreciate y'all. Appreciate y'all. I see we saw some people leave a little early, and I understand that. We went, a couple hours. Good, 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 good. Appreciate y'all. Thank y'all, man. I really
All right, thank you.
Yeah. All right.
Thanks,
So,
Nick.
yeah, enjoy y'all evening. Enjoy y'all evening and
Thanks,
good
man.
luck. Good luck, fam. Peace.